All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Welcome in, everybody. Happy Friday to you all. R Pink, welcome in. Thank you so much for being here for Modern. Spin B, hey man, how's it going today? CJ, yes, CJ, we were talking about this dump, and we were talking about it as the greater probability based off the larger Elliott wave structure, or just based off of, I know you were looking at something just a little bit different, but yes, it is starting to dump. Andy, welcome in so much. Thank you for being here, and thank you for modding. Quiles, what is up, man? Pito in the house. And yeah, guys, so here's the thing. Yesterday during the stream and on Tuesday, I even talked about this range here up near our very, very key resistance, looking like it was going to be a distributive range with bearish divergences on the chart and money flow draining out as the range was forming. I mean, guys, this is where NAMI and Market Cypher B can become so helpful for us, because a lot of people had a bias up here that we were going to pump up to 96K, 97K, or even up to 100K plus. And based off of our bias of the indicators, this is where our indicators can really come in clutch to save us from making some bad decisions instead of longing up in this range. I mean, unless it was a scalp, like we did take some little scalps. But we had the bear divs confirmed, money flow draining out as the range was forming. Last weekend, we had the same thing. Last holiday weekend, a range forming, bearish divergences confirmed, money flow draining out as the range was forming, and we dumped out of the range. Now we are dumping out of the range again. And we had this bias, first of all, based off two things. Based off the larger Elliott wave structure here, if we zoom out onto the 12-hour chart, based off of this larger 1, 2, 1, 2, a 3, your fourth wave generally comes up between the 382 and the 0.5. And then we are now looking for more impulses to the downside to finish this overall double 1, 2 impulse here. And we came right up to the key resistance that we were looking at. That backtest of the Fibonacci channel in confluence with your wave 4 target, that 0.5 wave 4 target. And on Tuesday, during the live stream, we actually hadn't come up and quite hit that yet. And I talked about on Tuesday, guys, I am looking to short around 94K when we do come up and hit that 0.5 Fibonacci. And if we lose this Fibonacci channel, we could look for shorts. And we are starting to distribute down out of that range. If we zoom back in onto the hourly chart, we are now dumping. We did lose the range value area low. We did lose the range lows, and continuing to push to the downside here. Coming up to our local golden pocket. Now, there is a couple things, guys. First of all, this does look like a very clean 3-wave corrective move here. An impulse here, a 5-wave impulse here, a 3-wave corrective move here, and another 5-wave impulse here, where we do have that ABC corrective target right up into our zone. Also, as far as time goes, our time of our fourth wave is generally longer than the time of the first wave, and this has been 12 days and 10 hours. Our first corrective move up here was about 10 and a half days, so it is longer now, and there is a possibility here that Bitcoin is about to see a 5-wave move to the downside to take out our 80.5K lows and come maybe down to our 78.3 to about 77.3 support. After that move, on the larger time frames, we are expecting some sort of bounce, and it could be another large 3-wave corrective move. And this 3-wave corrective move here for our second 4 could actually even come up and take out these highs. And then we could see one last 5 down to take out 74.5K. This would create that sideways range over the next couple of weeks to maybe a month before breaking down and taking out the lows, where then after this impulse from the all-time highs is completed, this bearish impulse from the all-time highs is completed, I will be shifting my bias to at least some scalp, like day trade long positions back up into, maybe 100K plus, depending on how far we fall. But what we're going to be looking for after this impulse finishes, so let me just go ahead and zoom out to the daily chart here. Let's just throw on, and let me clean up this chart. I got to turn off these naked daily points of controls, and I want to throw on this impulse to the downside here. So after our impulse to the downside, which it is a double 1-2 impulse, once we finish that impulse to the downside, we are going to be looking for a 3-wave corrective move to create a lower high overall before possibly seeing another bigger dump to the downside and continuing into a possible bear market here. What I would like to do, my plan is, first of all, to short the fourth wave corrective moves to bring them down to new lows, short another fourth wave corrective move to bring it down to new lows. But in our general support areas of 78K and really below 74.5K, I will be looking for, I don't want to call them swing longs because a swing long implies that we might break out to new all-time highs, but generally pretty big long positions to where we can make a move, and that move of the target is going to be our golden pocket pulled from the highs of the impulse to the lows of the impulse. So let's just throw it at 77.3 for right now. We could move all the way up to 107, 109K, taking out this liquidity here after we finish this impulse. But we are still within this impulse, and this impulse could last another couple weeks or even longer. So right now, the highest probability is still to continue in the downtrend. And with us losing our range today, with us seeing that sort of distribution range up at key resistances, we are looking now for a fifth wave to the downside. And that fifth wave, within that fifth wave, we will see a 5-wave impulse. And the target is taking out our 80.5K lows. Now, there is a bullish scenario still that we have to map out. Okay, guys? As traders, we map out both the bullish and the bearish scenario. We trade the levels, we hedge ourselves, and that way we're always in a win. So in a bullish scenario, 80.5K was a major low. Now, I don't see it as a major low. I'll just tell you my bias on this because there was no bull divs on the daily time frame. There was no bull divs on the 12-hour time frame, and it really wasn't a major support level down in this area. But if the bullish scenario is going to play out, then now, because we haven't invalidated yet our 3-wave corrective move or our bullish scenario, we could come all the way down to this golden pocket and bounce and then see a third wave. So we would be looking at a double 1-2. Same type of thing that we were looking at up here, where this was a wave 1, this was a wave 2, this was an internal wave 1, and this was an internal wave 2. Because we had overlap between the lows here and the highs here, you have to classify it that way as far as Elliott rules go. So what we'd be looking for now down in this general area, if the bullish scenario is going to play out, we have now a 1-2, internal 1, internal 2, and then we would explode up, and we would want to explode through this resistance. No grinding anymore, nothing like that. We would want to explode up through that resistance. We would probably even want to explode up past this point of control, the large range point of control at 96.6, and we would want to come up a bit higher here, and then we would maybe reject after taking some liquidity, and then we would see some 4-5s coming up possibly to wherever that golden pocket is before seeing this impulse finish here. So that is something, the bullish case scenario, that we do still have to pay attention to. It has not been invalidated yet, but it is not the primary scenario that I'm looking at. It is our secondary scenario based off of the high time frame bearish divergences we were seeing and based off the Elliott structure and closing weekly candles below our Fibonacci channel. This was the bearish backtest of the Fibonacci channel. If we do reject here, which we are starting to reject here, it is more probable to make new lows on higher time frames. Just like, guys, when we lost our 107K, let me zoom out onto the daily chart. Just like when we came down to our very key anchored VWAP of 107K, back tested it a couple times, held it, but once we lost it, you had a week move or so, about a week-long move to come up to bearishly backtest. Once you rejected here at the backtest, the bearish backtest, you expected to take out these lows, and we did. We dropped down to take out those lows. Now we have lost a even more important support level, being the entire bull market trend and the 49K anchored VWAP, as well as the value area low of our 2025 range. So you lose it, you close the weekly candles below it. Now we are going up for the bearish backtest. If we reject in this bearish backtest, we do expect to come take out the lows, just like we did here. And that would be right into some nice support that is right below us with a weekly level and a naked weekly point of control, naked daily point of control in there. So this is my primary scenario right now. But we are going into the weekend. We do know that weekends are often for ranges. And the thing is, we could be even looking at a more complex correction. Wave fours tend to be more complex than wave twos. Wave twos generally tend to be simple zigzag corrections up to the golden pocket, 786 area. In wave fours, we can get bigger flat corrections or bigger complex WXY corrections. And it is possible, guys, that this range here still lasts another week or 2 weeks or so. But if it is the bearish scenario, we really want to start to impulse down here pretty quickly. We want to start to see impulses to the downside, creating that fifth wave move, 5-wave move down, that impulsive structure down. So that's what we're going to keep an eye on throughout the weekend, throughout today, and coming into next week. All right, let me check the chat here real quick. Welcome in, everybody. Thank you all so much for being here. Crypto Clown World, welcome in, man. It's good to see you here. Tiki Taku, welcome in as well. 94K short printing, can't help. Awesome, dude. That is so awesome that you caught the exact top on that 94K. I mean, that was the exact level that we were looking at on Tuesday's live stream. Let's see. Diamond Whale, welcome in, man. What happened to the Golden Bull Run? Well, you know what? I think the macro economy happened to the Golden Bull Run. And also just our technicals, guys. Our technicals were so bearish. We had monthly bearish divergences. We had weekly bearish divergences. And even towards the top here, towards this distribution range up here, we had daily bearish divergences. If we zoom, actually just looking here on the daily chart, higher high, higher high, higher high, lower highs, and even lower highs here. But money flow was draining out as the range was forming, making this more likely to be distribution. Same thing happened in February and January. As we were in this all-time high range, bearish divergences confirmed, money flow draining out as the range was forming. It was more likely to be distribution. We distributed down. Same thing here. More likely to be distribution. We distributed down. Now, these are high time frame distributions. But what did we just see the last couple of weekends on the lower time frames? The same exact thing, guys. And same exact thing. Last holiday weekend. Range forming. Bearish divergences confirmed, money flow draining out, distributed down. Bearish divergences, money flow draining out, distributed down. Over here, bearish divergences confirmed, money flow draining out of the asset, starting to distribute down. And so we are seeing the same type of pattern, a bearish distribution pattern occur at all these major levels. We are seeing it on higher time frames. We are seeing it on lower time frames. The trend is still more in the bear's favor. All right. The funding rate was a hint too. It was negative the whole way up, but flipped positive as people were buying the top. Yes. And that's another thing, guys, primarily this first leg up, this leg up here was on a giant decrease in open interest. If I zoom out, let's zoom out to the 2-hour chart here, and we'll look at our open interest here and our, just our order flow, our CVD, our open interest here. But you can see here, as we were grinding up within this ascending channel here, our CVD was rising up the whole time. That means market longs were stepping in. But if what's key to look at is, are those fresh market longs or are those people getting wrecked, stopped out, or liquidated? And the way we tell about that is to look at our open interest. And when your open interest is steadily decreasing and declining, this is the amount of short positions or the amount of positions opening or closing in the market. So if your open interest is dropping, that means positions are getting closed out. And those were late shorters that shorted in this last little bit of price action here, this last little bit, that were getting stopped out, shorting towards the end of a mega dump, and they got stopped out, causing market longs to step in. A forced close of a short is a market buy, and that's why we saw our CVD increasing, but it was on a decrease of open interest, telling us that this wasn't really a healthy move to the upside. This wasn't a strong, healthy move to the upside. This was more of a late short squeeze, if anything. Now, after that happened, we were looking for a potential 5-wave impulse down to finish the 5th wave. But once we saw that we confirmed only a 3-wave move down, we were expecting to come up and take out these highs. And where were we expecting to come to? 94K. If you go watch the live stream, that's exactly what I talked about on Tuesday's live stream. And in this push up, this last little impulse that we got, this push up here, it started out a little bit as a short squeeze. And overall, look at your open interest is still decreasing here as we're pushing to the upside. And now we're starting to see, just like who was that? Drum Hop TV. We are seeing a bit of late longers getting stopped out here. We had a lot of people longing in this range, in this distribution range. So let me now zoom in onto the 1 hour chart. And you can see here within this distribution range, let me get rid of some of these drawings real quick. Within this distribution range of the past couple of days, look at your CVD here. Your CVD was primarily, well, where'd it go? CVD was primarily rising during that whole range. It was moving to the upside, long stepping in, and now it was a mixture of some fresh longs, some fresh longs towards the end here. Yes, some positions closed out, but we were seeing people longing towards the top, towards macro resistance, towards a macro bearish backtest. People were longing the top, and now that we are dumping and losing the range, they're all getting stopped out or forced to close their positions. So, it is looking, guys, like we are going to see that bigger dump to the downside continue. Is it guaranteed? No. Can we extend this range a little bit longer? Yes. We could bounce from the golden pocket. We could push back up. If we look at our levels, first of all, we broke that naked weekly point of control. I can go ahead and get rid of that. There we go. Naked weekly. And if we look at our naked daily points of controls, I thought we had a naked daily near that golden pocket. Let me double check this here. Come on. Yes. So we do have a naked daily right underneath our golden pocket around 87K. And we could see Bitcoin bounce from this general local support area. I would probably put it between the 0.65 golden pocket and that naked daily point of control. We could come down here, see a little bit of a bounce from this general area before making a lower high and then seeing your big third wave and then a 4 and then a 5 here. So that is, I guess we could be looking for some scalp longs here, but if you're going to look for scalp longs there, we want to have the bias, the overall bias, or at least I shouldn't say we want to. I am going to have the bias, and this is not financial advice, guys. I do not give financial advice at all. But my bias is going to be, yes, I could look for some scalp longs here, but keyword, scalp longs. And my TPs will be lower highs, not a new higher high, but lower highs. So if we do come down here and start to bounce, yes, I'll long it, but I'm going to take my profit at wherever that golden pocket is, pulling the golden pocket from the highs to wherever the lows are going to be. Let's say it right at that naked daily point of control there. I would be taking profit right around the anchored VWAP at 91.4, 91.5, 91.6. In this general area here is where I would TP. Now, in the bullish case scenario, because we could see that double 1-2 impulse, I will take profit, but I'll probably take out 75% profit here. Like it would be this. It would be a long position. Here, stop below the naked daily point of control. My TP of 75% would be here. That's a 6-to-1 risk-to-reward ratio. And I would leave 25% open just in case we are going to see the bullish 1, 2, internal 1, internal 2, and we're going to see a 3 up like this. Then we don't want to fully close out that position here because there is a probability that it could push up. It is the lesser of the two probabilities. Let me make that clear. It is the lesser of the two probabilities, but it is still a probability. So we could hold some of that trade open. Now, on the other hand, say we bounce here and we come up to this golden pocket and we start to reject from this golden pocket. This is where we could put in a very nice short position or add to our short position from 94K or wherever you're at there. You'd want to wait for the rejection a little bit. You'd put your stop below wherever that wick high was, and I would be targeting new lows below 80.5K. That would be my first TP, is taking out those lows, because if we're going to see the impulse down, the 5-wave impulse down, 1, 2, 3, 4, 5, we want to see us take out these lows at the very least. That's your minimum target in a fifth wave. Now, once we get down to taking out these lows or down to our big support box between 78.3 and 77.3, I will be looking for a long position. And I will be looking for a long position to take it up to our wave 4 targets between the 382 and the 0.5 Fibonacci of this move down. So we would take this move and we would look between the 382 and the 0.5. And around these general areas, we could look for a TP on this long position and a possible adding to the short again, at compounding that short again and looking for new lows to come take out your 74.5K lows. So these are the major trades that we're going to be looking at on the next few days, weeks on Bitcoin. But there is a lot of nice opportunity here for Bitcoin. And because we don't know for sure what's going to happen, we hedge ourselves both ways. We map out the key levels, both to the upside and to the downside, support and resistance, and we trade whatever comes. So that is kind of what I'm looking at, guys. Okay, Hot Tamale, welcome in. Of course, this happens on a Friday. Retail pump trap again. Yes, man, we see retail get trapped over and over and over. Job Fuel, welcome in, man. Happy Friday to you as well. Yeah, last stream of the week, but I wanted to be here for you guys. We had a little bit of price action happening, and I love doing this. Massey33, welcome in, and good afternoon to you as well. Yeah, please, guys, like the stream. If you get any sort of insight into the market or any sort of help on maybe possible trade setups and everything with this live stream, please like the stream for me, and please subscribe to the channel, share it with everyone that you think might find it interesting. Really quickly here, I do want to go over the partners of the channel. Let's just get this out of the way real quick so we can get back to the TA. But the main partner of the channel is going to be BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the descriptions, you will get a minimum of 20% discounts on trading fees. You can earn up to $8,100 in futures trading bonuses, depending on how much volume you move in those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you get a 50% deposit bonus, which is the highest of any exchange I've seen. And they're offering various 20 and 10% deposit bonuses if you deposit some of the larger amounts. This is only going till December 15th. Now, they might renew this again. So, but I would suggest you sign up while these really high initial deposits are included. And I've partnered with BYDFI to create a Telegram community where I do post my thoughts on the market, my analysis, my trade setups on certain trades. You guys can pop in the chat and ask me questions. Tag me if you do ask me questions. And it's free to get in. All you need to do to get into that Telegram, which is a private group, is to join BYDFI using my affiliate link. Once you've joined BYDFI, you do have to deposit $100 into the exchange. Now, that $100 is your own money to trade with. You will get the 20% discounts on trading fees. And if you KYC, you can get the 50% deposit bonus. Once you've done that, click the Telegram link in the description of this video. And once you're in the Telegram, type in /verify and then whatever your user ID is, which is going to be right up here. And that'll get you access to that Telegram group. And once you're in, you guys are in. Okay, second partner of the channel is Nami Trading. And guys, if you guys don't know how useful Nami can be, look at these last two ranges here, where everyone thought we were going to pump over the holiday weekend, over Thanksgiving, pump up to 100K. Well, we knew that it was distribution based off the bearish divergences. It even shows you the bear divs on Nami and money flow draining out of the range. We distributed down. A lot of people got trapped in this position, in this distribution range. Just now, over these past couple of days, forming another possible distribution range, bearish divergences confirmed, money flow draining out as that range was forming, giving me a bias that we were going to dump out of this range, not pump out of this range. So Nami can be such a useful tool, not only for entry and exits on trades, but kind of to give you a bias on what Bitcoin might do. And Nami has partnered with the channel. They are giving a 50% off discount code. If you use my affiliate link in the description and you type in Divine50 in the promo box when you sign up under Nami, you can get 50% off Nami. And to me, it is a tool to invest in. It's part, if you're going to be like any professional trade of any trade, they invest in the tools to help them succeed. I do think for me personally, Nami and Market Cypher B are those tools. Yes, they are both paid indicators. Not partnered with Market Cypher B, but I do like this indicator. Nami is just as valuable to me as well. And I did get you guys that discount if you want that. And then lastly, we do have Bybit and MEXC, both two other exchanges I'm partnered with. So if you'd like to sign up with either of those exchanges, links are in the description. They're also offering some futures trading bonuses and some discounts on trading fees and initial deposit bonus of 10% on MEXC. Okay, guys, let's get back to the chat. Let's get back to the TA here. Thank you for listening to that. And yeah, welcome in everybody. Yeah, 78K. I'm looking for CJ. I'm looking for new lows too, man. Sol SFP on the 15-minute, but not liking the sell pressure. Okay, I want to check out Sol real quick because I am interested in Sol. Sol is at our support level, golden pocket and the bottom of the pitchfork. So we could see, now here's the thing with Sol. Very similar. We shorted this area here, and we were looking to come up to short the swing failure pattern of these triple highs, not this purple box. This purple box was an internal one that we laid out yesterday. Now that's no longer going to be valid. That was kind of a scalp we were looking at yesterday. But the overall short was taking out this high and then dropping that back down below it. So we actually called both of these tops here and looking for shorts. But just like Bitcoin, I am looking for as a potential bullish scenario. And with a lot of these altcoins, we're at macro support levels, the value area low of our 2-year long range. And we're ranging between the value area low and the point of control. So this range could continue for a bit here. And we might see a small bounce from here to come up, make a lower high, and then come down, make a lower low, taking out all of these lows. And then we could see the range kind of continue with us grabbing liquidity on this side, on the bottom side of the range here. And the reason why I'm looking for a liquidity grab on the bottom side is because if we look at this low, with this low here, we passed the 886 Fibonacci. So if I pull a Fibonacci from the lows on Friday, November 21st, to our highs that we made in this ascending channel, and we turn on our 886 Fibonacci, let me make that yellow so you guys can see that. We did tap into and bounce from our 886. But the second you tap into this 886, especially the 886 really likes to bounce you in ranging structures. And we are in a ranging type structure, being at macro support and trapped between macro point of control, macro value area low. But because we tap this 886, it now makes it far more probable to come take out the liquidity below these lows because we're in a larger downtrend. And if you tap an 886 in a larger downtrend, yes, you might make a lower high or a higher high, but then you want to come take out those lows. So now my bias is, yeah, Solana is likely to come take out those lows, but are we going to just chop and range for a bit in between the value area low and the POC? And I think that's highly likely, highly probable. And so because of that, I'll be looking for potential, we could look at a scalp long here. Let's see if right now on 2 hour, I don't like the way the 2 hour looks. Money flow draining out pretty aggressively. Let's go into the 1 hour chart here. On the 1 hour chart, no bull divs, money flow draining out pretty aggressively. So far, I don't like what I see for a long position. 15-minute chart, do we see some bull divs? Yeah, we see slight bull divs here. Okay, yeah, lower lows here, higher lows here, higher lows here, all through that. And money flow starting to come up here. Money flow is starting to round up here. So we might get a little bit of a scalp long opportunity from this golden pocket, but make no mistake, it is a scalp long opportunity. I would be, if you're longing this, my TP would be the top of the pitchfork. Oops, let me see, let me back that up. My TP would be up at the top of the pitchfork here. And so let's also pull our golden pocket from the highs to the lows here. And we'll look at our golden pocket. Golden pocket's a little bit higher. And actually, I do like this golden pocket for one reason. What do I talk about is the most important thing in this market is liquidity. Look at that liquidity that is resting up. That it's an internal high, but it would still be stopping out some liquidity into a golden pocket. And anytime you see a liquidity grab into a golden pocket, hey, that's something that I can get on board with. It's a really good trade setup. So say we do form kind of a bottoming range in here, and we break this little kind of sideways range here to the upside. I would be looking for a scalp long opportunity to take up in this general area. Because what might happen is we might, just like we saw on Ethereum, we wicked up past the level, hit the golden pocket, Chainlink. We wicked up past the bottom of the pitchfork, hit the golden pocket, and then we closed the candle at or below the pitchfork, and then we ended up kind of dumping. So we might see something very similar here with Solana, where you push up in a scalp long position, you hit the golden pocket, take the liquidity, but you close like an hourly candle at or below the pitchfork band. And that's what we're looking at here. Now, if we lose this golden pocket, let's check our levels below us. Let's see if we have any weeklies. Okay, this is also a weekly level. Guys, this is actually a nice support here. Weekly level, golden pocket, pitchfork band. Actually, I think I might even look at entering a scalp here. Daily level, we do have a daily level at the, it looks like what's going to be the 786 Fibonacci. Let me zoom out to the hourly chart and let's pull that Fibonacci again from the lows of a couple Mondays ago to the highs, and let's turn on our 786. No, it's okay. Daily's below the 786, a little bit too far for my comfort. And then let's look at our naked monthlies. No naked monthlies in there. Do we have any naked weeklies? Yeah, actually, never mind. So that daily is going to be nice. We have a naked weekly and the daily there. And then a naked daily there as well. So the next level of support, if we don't hold this golden pocket, the next level of support is going to be this little area here. And what I would look at now is, yeah, it does look like we could get a possible scalp long opportunity, guys, from where we're at right now. Let me just do this real quick here. I want to just label this daily, naked weekly POC, naked day. Okay, so what I would like to do, what I would like to see here, golden pocket, weekly, pitchfork band, taking along here, taking profit, at least 75% profit in this general area. And then if we do see a rejection and come down, we might see a small bounce from here to back test this area before continuing down. So you could look at taking a scalp long here to come up to test here. And these are just small scalp levels, guys. Let me see. Is everything okay in the chat here? Next week, mark my words. Okay, wait. You guys, everything okay? Can you hear me okay? My sound mixer is looking like it's working okay and everything like that. But just let me know everything okay here in the chat. But that's what I'm looking at for Solana, guys. Solana looks pretty good. Let's zoom in onto the 5-minute here. Let's see if we can't get a scalp position right now from this. So I do like this, guys, because look at, we're starting to form that exhaustive kind of descending channel here. And 6-minute bull divs, money flows now starting to curve up. You got the bull divs on NAMI, money flows about to cross over here. So if we come down one more time, even into our little mini micro golden pocket in here, pulled from the lows to the highs here, golden pocket, coming in like 131.8 to like 131.9-ish, we might be able to get a small long position from this general area to bring it up. And now remember, in a bearish trend, your VWAP also can reject you. That's what happened with Bitcoin yesterday. Actually, I want to talk about that. But let's set an alert here at our golden pocket here, 132 create. Okay. Now on Bitcoin, let me first finish reading the chat with everyone here, and then we'll go into that. Where was I? Okay. Close those swing longs. Call those swing longs. Swing longs, I think you meant. Yeah. Weak rally if it finishes at 94K. Well, it wasn't supposed to be a rally. It was supposed to be a corrective move based off the probabilities. And yes, so it was weak, but it was meant to be weak, meant to trap a lot of traders, and it did. CJ, thank you for that kind comment, man. I love you guys as well so much. For unknown reasons, I'm really admiring y'all today, everyone in this community. I appreciate that, CJ, and I really do appreciate you being part of the community too. I know you are very active in the chat during the live streams, and it's nice to see people who throw their own opinions out there, throw their own kind of analysis out there, and we can all banter back and forth between it. And I think that's what helps us all become better and more understanding traders, is when we look at other points of view, not just our own. So thank you for being here, and thank you for that kind comment, man. I'd say we cut next week. Yes, we are most likely to cut next week, but here's the thing. That rate cut has already been baked in, and if they only do another 25% rate cut, and then Jerome Powell comes out hawkish because of the CPI inflation numbers and stuff like that, it is going to be, a lot of people are going to long on that 25% headline rate cut, you know, the headline of a rate cut, and then boom, we're going to trap them just like we did last time. I've seen this over and over and over, guys. So let's watch next week. Should be interesting. Mind Tapestry, welcome in, man. It's good to see you. Yes, thank you for catching the live stream. And Anu Sad, welcome in as well. It's good to see you here. Yeah, we're gonna look at ETH. Bobby, we'll look at ETH here real quick. Can you explain the literal meaning of distribution? Well, with Wyckoff distribution, CJ, we're looking for like it's 3 and a model 2. I'm going to simplify this because it goes really into depth. There's like last point of supplies. There's a bunch of things you're looking for, but in a model 2 distribution, you're looking for like that head and shoulders pattern where you have your tap 1. Now, in either a model 1 or a model 2, your second tap is always higher than your first tap. Always the case. So you'll have a tap 2, and then in a model 2 distribution, you'll have a lower high, usually at the golden pocket. That's your tap 3. You have your 3 taps, and then when you distribute, that means you're breaking the range to the downside. This is like a little range in here. You're breaking it to the downside with volume, and you can look at different technicals within Wyckoff that will let you know whether or not it's more of a distribution or not. And for me, these indicators down here, looking at money flow and bear divs, are very helpful. Now, a model 1 distribution, that's a model 2. A model 1 distribution is where you make your initial high, you make a second high that's always higher than the first high, and then in your third tap, it's actually higher, and it's creating kind of that like ascending channel here. And that third tap, making a new high, oftentimes it will be a swing failure pattern of this high, or in like the flat corrective zone, like between the 1.382, 1.236 area. And then you start to break your range to the downside with volume. So that's a model 1 distribution. A good example of what distributions look like. If you guys go watch my video that I made, I think it was in late November or early December. But if I look at, where's my index chart? Okay, here's my index chart. If I zoom out to the daily time frame, what just happened here? There we go. Daily time frame. And I can show you guys an example. I made a very in-depth video while we were in this range here. A lot of people thought we were about to pump up to 120K. And I came in here and I laid out some distribution patterns. So here's what a distribution looks like. You have your last point of supply is here. It's pretty much a sign of weakness here by breaking the lows. So there are technical things to look for. Your up thrust here, definitely technical things to look for. And there's phases to it. But you can look at labeling out these phases and you can see that, yes, it was likely to be a distribution in this general area here. And sure enough, you distributed down. So there's different Wyckoff distributions. If you go watch that video, I actually covered all 3. I covered a model 2 distribution. I covered a model 1 distribution. And I even covered what's called reaccumulation. And I said, guys, if that video was like an hour long, I said, it doesn't look like it's going to be a reaccumulation where we have a spring and we push up here and break up to new all-time highs. A lot of people were thinking this was going to be reaccumulation, including Andy from Bitcoin Consensus was actually thinking that was. But here's the thing, and I'm not throwing any shade on Andy. Andy is such an amazing, fantastic trader. I have so much respect for that guy. The thing that I was looking at that Andy was not looking at because he doesn't use them is Market Cipher B. Now, at the time, I did not have NAMI, guys. I was not partnered with NAMI yet. I did not have NAMI. But as this range was forming, we were making higher highs in the price action. We were making confirmed lower highs in the momentum waves. But as this range was forming, money flow was steadily draining out as the range was forming. And sure enough, as soon as we crossed into the red, that is when we lost our channel. We back tested it bearishly, and then the distribution started. So this is where it can be, having Market Cipher B and NAMI can be really helpful to tell whether it's distribution or a reaccumulation or, something like that. So that's just a short explanation of distribution, what Wyckoff distribution is, but you can go way more in depth on that. I would recommend you could also search up YouTube and look at some distribution videos, or White Phoenix from Jason's Discord is really good with Wyckoff as well. I learned some of the stuff from him, but he was taking a while to get done his course. So I went onto YouTube and I learned it myself. And distribution accumulation, it's very useful, especially because the bigger players don't generally buy in one spot. They're say they have $2 billion they're looking to load up on Bitcoin. They're not all going to buy it here. They're going to wait for a little bit of an accumulation range, and they're buying towards the bottoms of that range, towards the bottoms, and then boom, it explodes. So they kind of layer in their buys at major levels. Okay, yes. David Hornback, welcome in. What benefits have I noticed from SheLegit? Was considering taking what you are. Dude, for me, okay, SheLegit, and I'm pretty healthy, guys. I go to the gym 5 times a week. I'm not overweight. You know, I'm in pretty good shape. I'm not in as good a shape as Jason. Let's just make that clear right now. But for me, I was not getting, yeah, I couldn't sleep super well. I can go to sleep. I don't have like insomnia or anything like that, but it helped tremendously with my sleep. Deeper sleep, more REM sleep, you know, just way better. But energy was a big thing for me. And especially after I ate lunch, I would always get this like afternoon fog and like kind of lethargic feeling from eating. And it's probably because I don't eat the best. You know, I do eat sugar still and things like that. But when I started taking a Shilajit, which actually, if you look at most of the super high-end testosterone boosters out there, a lot of them have Shilajit in it as one of their primary source, like 40% Shilajit or fulvic acid. But Shilajit is just minerals, plant material from millions of years ago that has been compressed high up in the Himalayan mountains or in a different mountain range in Russia. I forget the name of that mountain range. And it's been compressed in between tons and tons of rock pressure for millions of years or hundreds of thousands of years. And it takes all those nutrients and the terpenes that are in plants, and it literally just like puts them into this big, like super packs them into this goo. And it's in the same bioavailable form that your body's been consuming these minerals and vitamins in for thousands of years, hundreds of thousands of years. So it works really well to balance your hormonal system, especially in men. It does help with their testosterone levels. But the biggest benefit a lot of people talk about is energy. And I have to say, for me, man, it was like taking 3 Monster or Rockstar energy drinks, but you sustain that energy all day long, no crash, no jitters, no nothing like that. And when you did want to go to sleep, you could go right to sleep. So for me, it was tremendously helpful. Brain fog, energy, and sleep. It really great, man. Really great. And I really recommend, if you guys haven't tried it, it's an Ayurvedic supplement. It's all natural. For me, it is so worth the money to give it a try. Now, the best way to consume it is in that resin. It's like, it looks like tar, almost, you know, looks like a drug almost or something. But it's very gross and earthy and bitter tasting. But if you can get past the taste, or if you need to, buy it in a gummy form or a powder capsule form. For me, the benefits far outweigh the taste and stuff like that. So yeah, I would recommend it, man. David, I would recommend it for you. Margaret, welcome in. Nami shows even bigger money flow out than the 80K dump. Yes, and that's another thing, guys. We are looking at money flow like starting to leave the asset pretty hard here. And then the 80K dump. Let's see here. Yeah, 80K here. Well, it's not, I don't know what time frame you're looking at there. Yeah, it looks like it could be, or just about the same amount. Yeah, it looks like the same exact amount of money flow leaving, at least on the 2 hour. But I do think this money flow leaving is indicative that we might see that impulse to the downside. So yeah, absolutely, guys. With institution involvement, we no longer have bull or bear market, just steady. Yeah, Mind Tapestry, I somewhat agree with this comment. Now, we're still fresh into this, so we're not sure. You know, we could still have bull and bear like kind of cycles or like trends. And this bearish trend might continue up until the first quarter of 2021, you know, March of, or 2026, not 2021. But I do think it's going to be far less volatile now that the big institutions are in. Yeah, sound is good, chart is tidy. Thank you, man. I really am trying to keep my chart clean. Guys, the sign of a good trader too is they don't have a million different levels on their chart everywhere, you know, and make it so clouded and hard to read. You want to, you know, and I need to get better at this. Like, you know, now that we know this golden pocket's there, I could delete this. I could hide this naked daily point of control, and I could mark this box here with, just come in here, naked daily POC / golden pocket. And then that way it's labeled. That way we know what we're coming into here, but we can keep the chart clean here. And then this, obviously this is a theoretical fib for now, so I'm not going to mark anything out there. But you could even, you know, right here, like I just left that on because that's not too bad looking, but keeping a nice chart is a good practice if you're a trader. Let's see here. I'm scalping long again. I'm long from 88, 360, 630. Okay. You're still looking to come up to 95 to 98K. Yeah, I mean, we could. So here's also another scenario, guys. We could be looking at a 5-wave impulse, a wave 1, a wave 2, because the wave 2 did retrace to the golden pocket area or just below the golden pocket. But if you're looking for a wave 3 here, your wave 3 generally breaks up to the 1.618 Fibonacci extinction. So if we pull from the lows to the highs. That's the wrong indicator. Oops. Trend-based Fibonacci extinction. Lows to highs to the higher low here. You're looking for your third wave. The most common target is the 1.618. Well, the 1.618 is all the way up at 106K. But in an ABC correction, your most common targets are between the 1-to-1 and the 1.236. Well, guys, we didn't even make it up there. We came up to the 786 Fibonacci, which is another common target. Less common, but it is a target. But look at where we had, and I marked this. I told you guys about this ahead of time. When we were hitting into that 786 and that 0.5, I showed you guys this on Tuesday, or it was, I think it was Tuesday's live stream. And we came right up to that 786 and that 0.5 in perfect confluence with each other. And that is an area to reject. It's a less common area, but it is an area to reject in an ABC correction. So because we are rejecting perfectly from that area, it makes it far less likely that this push up was a wave 3. And because of that, it means that, and now that we're breaking local market structure bearishly, it makes it more likely that this was a 3-wave corrective move, and now we're about to dump down. But in a bullish scenario, you would be looking at, say this is a wave 1, a wave 2, a wave 3, and now we're looking for our wave 4 before seeing a wave 5, right? And it's kind of like this contracting or leading diagonal, they call it. It's still a motive wave. In Elliott wave theory, it can still be an impulsive motive wave. So if we're looking for a contracting diagonal, the invalidation is hitting this golden pocket, okay? But if you pull your Fibonacci from the lows to the highs of this last push up, and you look at between the 382 and your 0.5, your wave 4 targets, we are kind of bouncing from that 0.5. We did wick past it a bit, but that is kind of the area where you want to bounce from. And you can see we wicked past it a little bit, but we are starting to bounce from that area. So there is still a small probability that this is a 1, 2, 3, 4, 5 coming up to, 96K, 97K. But because your wave 3 was so short and not even made it up to the 1-to-1 Fibonacci extinction, it makes it far less probable. Your much, much higher probability is that this was a 3-wave completed ABC correction into major resistance, into major pitchfork backtest resistance or fib channel backtest resistance, and now we are about to impulse to the downside. So I get what you're saying, SpinBee, but just be careful with those, okay? If you're scalping, make sure you're setting your stop losses and putting your TP1 and stop loss to break even as soon as you can. French Toaster, welcome in. It's good to see you in here. Okay, still looking liquidity grab above 95K. Yep, okay. ZMX, welcome in, man. The bear trend is continuing. You're right. By the way, I want to ask you to delete that the pitchfork. It's too bearish. I want all-time high this year. Oh man. Okay. Well, if I delete it, the market's gonna pump, dude. I don't know. I'm in a short still, so I'm just Can you please take your red channel off? Can you please take your red channel off your charts, please, so we can break 94K? Yeah. Okay. Diamond Well, same thing. Oh gosh, guys, I'm sorry. I'll take it off for just a second, okay? Boom. There you go. Now let's see if we pump right now. What's the order flow looking like on ETH? Oh yes, we're gonna cover ETH right now, guys. Okay. Can we vote to take red channel off? It just feels market. I took it off for you guys. So there we go. Now watch us pump. Can you check ETH BTC? Yeah, we're gonna check ETH USD, then we'll check ETH BTC. We can look at Sol again real quick. 117 on Sol is your target. Okay, we'll start getting into some of the altcoins here, guys. But yeah, Kespo, welcome in, man. Welcome in. Let's go into ETH real quick here, and then we can go back to Solana. Now, ETH is coming down to our 0.5 Fibonacci in confluence with the naked daily point of control. And just like Bitcoin, we could be looking at this as a 5-wave motive wave, 1, 2, 3, 4, 5, a contracting diagonal here, where it is a motive wave and we do get one more high. Remember, on Ethereum, I really did think we were going to come to test this $3,300 area. This was our next resistance. It was a naked daily point of control up there. We had a naked daily point of control. We had the back test of the value area high of our 4-year long range. Or wait, no, not that range. I'm sorry. It's a different range. I'll show you that in a second. And your anchored VWAP. So if we zoom out onto the daily chart, and actually, let me just do this real quick. I want to extend this box just a little bit. You have the anchored VWAP from your $1,400 lows. And the reason why this is important, the bearish backtest of this level is important because now that we've lost it, it's going to act as a big resistance. Just like here when we broke above it, it acted as a big support and then you continued. So now we're in a big downtrend. If we backtest it and we reject, we can expect the downtrend to continue. But also, if we check out our levels here, a naked daily point of control, we do have a naked daily point of control sitting right at 32.96, right where that guy is. And if we look at, do we have naked week? Do we have any daily levels there? Nope. Okay. And then also, guys, we do have the value area high of our sideways range. Let me get that range. That is not that range. Not that guy. Let's see. Get rid of that guy. Okay, I had it. It's this range here. All of 2025's price act. No, from March of 2024 over. And you can see that's the value area high of this. No, sorry, guys. It is the 4-year long. Hold on. I'm getting confused here. I know there's a value area high somewhere here. It was from one of these ranges here. I guess that's not it here. Let me see here. Yeah, you can see value area high of your 4-year long range is in that general area. No, it's not. There was a value area high there. I'm not remembering where it was from, but it is a key value area high here as well. I think maybe it was this guy here from this high. Looking at that cycle. Nope, that's not it. Anyways, it's a key area nonetheless. Anchored VWAP, naked daily point of control. And if we look at, was it our golden pocket as well? If we pull from the last daily high to the daily low and we look golden pocket. Yeah, golden pocket's up there as well. So that is a big area. Golden pocket, naked daily point of control, anchored VWAP, and maybe a value area high. I can't find it right now. But naked daily POC, golden pocket. Okay. So that is that area at 3,300-ish. But we are rejecting, and guys, where are we rejecting from? Exactly from the bearish backtest of your anchored VWAP on Bybit in confluence with a pitchfork midline. Guys, pitchfork midlines are so strong. They bounce you, and then once you lose them, bearish backtest. And look at on this bearish backtest right now, this is a 3-wave corrective move, bearish backtest, likely to come lower if you reject from this bearish backtest. So, yeah. Diamond Whale, wow, dude, thank you so much. I really appreciate that super chat. Thank you so much. That's really awesome and kind of you. Appreciate that so much, dude. You can sleep now. I'm sorry, man. I'm sorry. Should I take off this pitchfork too so it can pump on ETH? But thank you, dude. That's an awesome super chat. Thank you so much. And ZMX, thank you so much as well, dude. I appreciate the super chat as well. Appreciate all of you guys so much for being here. I really do have an awesome community. All you guys, I love being here. Okay. All right. Let's go back to looking at Ethereum real quick, and we can go on to the lower time frames here. So we are coming down to a local support level, being that 0.5 Fibonacci in confluence with the naked daily point of control. And you do have some slight, like it's only a little slight liquidity grab, but there's some liquidity resting down here. The big thing is, guys, we really don't, this looks just like Bitcoin, way more to be a 3-wave corrective move. And now we're really going to dump back down with Ethereum. Oh, look at, I knew there was a value area high here. See, value area high, at least on the 1 hour, it's showing the value area high here that's of our 4-year long range. Our big 4-year long range. See, and the value area low is all the way down at 1,400. Let me click that. Boom. Okay. So here's the thing though. With Ethereum, we are in a larger downtrend. We have lost the pitchfork level. Let me zoom back out here. 12-hour chart. I'm going to hide some of these ranges now. Let's get rid of, let's see here. Hide this. And I will get rid of your all-time high. Okay. And let's hide this. What we're looking at here is in the bigger downtrend, we did reject and form a distribution pattern at the top of the pitchfork. We came down and we bounced on October 10th from the bottom of the pitchfork band, and then we chopped around and held the top of the pitchfork band about 3 tests, making a range and finally taking out the liquidity of the range before we lost the pitchfork band. Now, this is important, guys. Just like with the bearish backtest of the fib channel that Bitcoin is seeing right now, after coming down and hitting local support at 3,000, there was a golden pocket like 31, 3,200. We wicked a little bit past it, and we wicked into the value area high of this range. But now we had the bearish backtest, a 3-wave corrective move. We came right up here, and guess where that was? At $3,600. If we look at our 4-year long range, at least on the higher time frames, when you zoom into the 1 hour, for some reason, it shows it at 3,300. Let's see, 4-year long range. Okay, it has shifted down now, guys. Let's go to the daily chart. No, okay, so look at here. On the daily chart, and this is a large range, so we should be using large time frames to analyze the volume. But that was at $3,600 right here, $3,570 to $3,600. Was the bearish backtest of the value area high. And we fell back inside the value area high. So we were coming up not only for the bearish backtest of the pitchfork band, but also the value area high. We rejected here on the bearish backtest, and we did make new lows below this low. And we would expect that Bitcoin, if it rejects from its fib channel, it's going to do something very similar. Now that we've lost the anchored VWAP, we could expect the same thing. But we are at major support right now, the pitchfork band of support, and it's also the value area high of this range. So we could see a bounce, and it's our non-log golden pocket, by the way. Non-log, if we take this golden pocket pulled from $1,400 up to all-time high, and we just turn on regular golden pocket, boom. Okay, Bitcoin, alerts going off on Solana. Let's check that out real quick. I want to make this log again. All right, shut up. Here we go. All right, Solana, let's check here. We haven't quite come down there yet. I set it a little bit above, but what I'm looking at here, guys, is like a tap 1, tap 2, and if we come down tap 3 here, we could look at longing that. For some reason, that golden pocket. Oh, shoot. Okay, sorry. I had mistakenly pulled the golden pocket from the wrong spot. So we're looking to come down a bit lower, guys, to 131.5. At 131.5, we want to look for that golden pocket touch. So let's re-add an alert right next to that, 131.5, and we'll wait until we get down there. But if we get down to this golden pocket and we continue to see some bullish divergences on low time frames, we might look at taking a scalp long from this area. Going back to Ethereum. So what was asked on Ethereum? Let me go scroll back up real quick here and look at what was asked here. I am not seeing it. Your TP for your BTC is 124K. ZMX, well, I mean, if you're in profit and you have moved your stop loss to break even, then good for you, man. Leave some of it open until that level. I am telling you right now, respectfully, ZMX, I have to disagree with you. I think the highest probability is for lower targets, not for higher targets. But neither of us know what's going to happen. So if you're in a profitable long trade, do not close it. I'm not saying that at all. I just have to disagree a little bit. I do think we are going to come lower. Welcome in, Decrypto. Good afternoon to you as well. It's good to see you in here. Jerry16, welcome in as well. We'll check ETH BTC. Yeah. Okay. Crisp and clear. Okay, cool. Sexy and deep voice as usual. ZMX. Oh my gosh. And Sudeep and Time Attack. Welcome in, guys. Thank you so much for modding and being here. I appreciate both of you. And our pink as well. Yeah. Okay. Yeah, please smash the like button, guys. If you get anything out of this stream, please smash the like button. David, yes, it does help with testosterone. To answer your question with a She-Legit, it absolutely does. You can measure it. I actually took a test, and it boosted me like a couple 100 points, which is huge. I also take something called Long Jack. When I'm in the gym, I'll cycle on and off Long Jack. And that is a natural herb that helps boost testosterone as well. But you don't want to take it consistently. You want to do like 2 months on, 3 months off, 2 months on, 3 months off, 2 months on, something like that. Which brand do I use? It's called Healing Shilajit. It's Himalayan Healing Shilajit is the name of it. But yeah, it's not a pill. By the way, Afterglow Gaming, it's not a pill. It's a completely natural substance that comes from the earth. It is just 85 minerals in their bioavailable form in the same ratios that we've been consuming in nature for hundreds of thousands of years. It's an Ayurvedic supplement, actually, and it's not a pill. But it is just a very dense packed nutrient supplement. Now, guys, eating clean and eating right is the best way, but let's be real here. Our food nowadays is so depleted of nutrients that this is a good way to get extra nutrients. But I'm not telling anyone what to do to take this, not take this. You can look into it for yourself and see if it worked for you. It did work for me, and I'm not let's just say, yeah, you need to decide for yourself. So but I do agree with eating clean, organic food and working out is probably the best way to stay there. I really like all the natural testosterone cypionate. Well, yeah, I get you, man. Okay, let's see. 100% cheaper and better. Yeah, okay. It's just be sure it's not from Russian gulag. Yeah, Machi HK for sure, dude, because some of the Shilajit comes from Russia, that mountain range in Russia, the Aslak Mount or something like that. Yeah, Shilajit is legit. Stack it with carbon 60 and ashwagandha, and you'll get a really synergetic effect. Awesome. Well, Crypto Clan World, I haven't tried that, but I have heard of carbon 60 before. I've not taken it personally, but I know that a lot of people swear by it. So, okay, let's see here. China, Russia, wheatgrass, chlorella. Yeah, chlorophyll, which acts as a bodybuilder together with iron. Okay, cool, Baru. Thank you for that. Wheatgrass, chlorella. Mixed with some Zen, and we are feeling focused. Yeah, mixed with some Zen. There you go. Right? Actually, nicotine is a nootropic in certain amounts, small amounts. Yeah. Black tar Shilajit. That's exactly right, DJ3. R Pink, you're right, man. I'm looking for BTC because pain up to 95. Yeah, it could be some pain to push up to 95 to 98. That's for sure. Bullish structure on all time frame. BTC is forming bullish structure on all time frames. However, you are bearish. Well, I don't think it's forming a bullish structure on all time frames. Look at zoom out to the daily time frame. It is bearish by far. We have not. Let me go to Bitcoin. Like, where do you see bullish structure here? As far as market structure goes, we have a lower low, lower high, lower low, lower high, lower low, lower high. Now it's more likely to make a lower low here. And if we zoom into the 8-hour time frame, yes, now that we took out this high, you could say that we're breaking market structure bullishly local, but overall lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high. So this could be your first start to break in market structure of a bullish market structure. But we have to remember our overall bias is based off higher time frame analysis. And if we zoom out to the monthly chart, we have confirmed monthly bear divs. Every single time we have confirmed these monthly bear divs, they've printed major tops. Higher highs, even from 2024, 3 higher highs, 3 lower highs, money flow draining out. Bear divs confirmed on the monthly. If we go on to the weekly time frame, on the weekly time frame, we do have triple drive of bear divs, 2024, January, now. Triple drive bear divs, money flow bear divs as well. And if we look at NAMI, this last 3 all-time highs, bearish divergences confirmed, money flow crossing into the red on the weekly. So high time frame signals are showing that a pullback is more likely, but market structure is also showing a pullback is more likely. And one of the reasons I'm bearish too is, sorry, Diamond Whale, you might have to take back that super chat because I'm about to turn the fib channel back on. Oh no. Because we're breaking our entire bull market structure and we're closing weekly candles below this bull market structure. So what we're seeing right now is a bearish backtest of that structure. And if we bearishly backtest this structure and reject, then it is way more probable to come take out the lows. And so far, we are rejecting from the bearish backtest of this structure. So that is what I would say there. Let me get rid of this. Very, very locally, like 4-hour time frame. Yes, we do have some bullish market structure, but you could even say, okay, if we're looking at 4-hour market structure, we have our higher high because we broke above this high, higher low, higher high. So could we say higher low? Yeah, we could say higher low here at support and then push back up. Yeah, sure. That's why I'm looking to scalp long that, because we do have local market structure in our favor. But if we zoom in now once more, we've actually even broke market structure bearishly, very locally, because we had our higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now broke lower low, lower high, lower low. So on the 1 hour, you could say now we're starting to break market structure bearishly here. So at least locally, we might come down to support more to the downside. But as far as Elliott wave analysis goes, the double 1-2 impulse to the downside being incomplete is the highest probability. So that's why I am saying that. Anu sad. That's why I'm saying that. BCP 125 with BPC. Yeah, I know what BPC 125 with some BTC at 125. Yeah, spirulina is a really good superfood. But okay, wheatgrass chlorella. I'm gonna have to check that out. I think 80K to 94K is a wave 4 WXY pattern. Yeah, 80K to 94K. Yes. So I'm looking at it very, very similarly. Machi HK. This here, there is a way to count this as a 5-wave impulse. So if this was either way, whether it's a WXY or an ABC, I'm looking at it the same way as you are, as a corrective move to backtest some key resistances before continuing the impulse to the downside, right? Before continuing the impulse to the downside. But we could look at this as a WXY, sure, because you could say this is a 3-wave corrective move with this being a flat in your B wave, or your, B wave, and that's your C wave. And then you got your 3-wave corrective move in your X, and then your Y wave here. It's kind of hard to count this as a 3-wave corrective move. And if we're looking at a WXY, maybe this is still part of the Y wave, and we're going to do this in a Y. Because in a WXY, you want to see a 3-wave move, 3-wave move, 3-wave move. But overall, it's still making that larger zigzag move. In a ABC, you're looking for a 5-wave move, 1, 2, 3, 4, 5, a mini impulse, followed by a 3-wave corrective move, followed by a 1, 2, 3, 4, 5, another 5-wave in a C wave. So A, B, C here. Now, I was looking at this here, and there is a way to count this 1, 2. All of this is your 3. You get your 4, and then your 5 here. Your very clear 3-wave corrective move here. And then in this C wave, you have some overlapping between these lows here. So a couple of 1, 2s. This was your big 3 here, and then you get some 4, 5s here. And your C wave could be complete, and now we're about to start to dump down. But either way, Mach HK, I'm looking at the same, pretty much all of this being a corrective move to the upside before further continuing the bigger impulse down. And another way we can look at why would we say that is, let's look at our indicators. Let's go in onto the 4-hour chart. Do we have bearish divergences? Higher highs in the price action, lower highs in the momentum waves. Bear divs here. So yes, we do have bear divs confirming this could be a corrective move. Do we have 8-hour bear divs? Yes, we do. Money flow draining out again. Do we have bear divs here? Yes, we do. Money flow's actually looking decent on NAMI right now. Do we have daily bear divs? Not on Market Cipher B, but on NAMI, we do. Bear divs here. Okay. So, and then one last thing we can look at for confirmation to get a bias, whether this is corrective or impulsive. Look at your volume. Turn on your volume from the low, your volume from the low. Is it decreasing as the structure is going to the upside, or is it increasing? Because if it was impulsive, you would want to see increasing volume here. Now, on Coinbase, it is a bit choppy. Oh, let me turn that volume back on. I'm sorry. On Coinbase, it is a bit choppy. We do have some volume, but most of the volume spikes, the big ones, are red. Yeah, I guess it's a mixture of red and green. But if we go on to Bybit USD, which is the second most chart I respect and follow, we do have that volume that was decreasing all the way on your way up to the top here, up here. And then you got your spike in volume in your C wave, which you do see a spike in volume on the C wave, but look at your C wave volume. It's still decreasing as we're rising here. Okay. So, and then of course the big red spike in volume on the dump to the downside in your B wave, if this is an A, B, C here. So either way, you see volume confirmation for this looking more corrective as well. And yeah, I'm looking at dumping and losing this. And guys, we did lose our channel midline in confluence with that 382 that we talked about, and it was also where your pitchfork band was. We talked about that a little bit in Friday's live stream, or yesterday's live stream, excuse me. Okay. Let's see. ETH, yeah, we kind of looked at ETH. Let me keep scrolling here. I'm sorry, guys. I'm trying to keep up with the chat and be more interactive with the chat, but at the same time, I do want to cover this for you guys. Love it here too. Yeah, Kespo, I really do love all you guys. I really appreciate you guys all being here. Man, this is so fun for me, you guys, to trade with people like you guys, and I really want to build a community here that we all kind of throw ideas out with each other, help each other, and really become profitable as a community together. Like, how cool is that, man? To me, there's nothing better. Being all good together. Okay, we're gonna cover Arrow. We're gonna cover. Let's go to ETH BTC real quick, guys. ETH BTC. I guess I will use Bybit here. All right, and let me zoom out on this here. We're gonna check this out. Let's turn off our volume real quick. Is there a longer chart? Let me see here. ETH BTC. Where's the index chart? Or let's check Binance. Yeah, okay, there we go. All right, ETH BTC Binance. So we've been in this range, God, for 9 years now, in this kind of rangy type price action. Actually, it's most of the price of the coin. I don't know if I would even call that a valid range. We are coming down to a major point of control. Now, that should tell you that ETH is coming up to support against Bitcoin. Is it going to pump here? I also would say this here, we're going to zoom in a second, but this looks like a corrective channel. And oftentimes when these channels break, they break up aggressively. And you want to come down to major support. We're at major support here. We could be looking at this as a wave 1, a wave 2, a wave 3, a wave 4, and then a wave 5. So now let's pull our Fibonacci's here, our Fibonacci's, to see from the lows of wave 3 to the highs of wave 3. We're going to turn on our wave 4 targets between the 382 and the 0.5. Well, look at where your weekly candles bodies are closing at the 0.5. You did wick to your POC, but you have not hit the golden pocket yet. If you hit this golden pocket, it will invalidate it as a 5-wave impulse. But so far, this could be your wave 4, which is actually always longer and more corrective, or longer than your wave 2s, or at least the same amount of time. And it shows that. So right now, I would have to say this is still valid for our 1, 2, 3, 4, 5 here, for a 5, and to come take out these highs. That's your objective here, is to come take out those highs. Let me go on to the monthly real quick here. Let's get rid of this, and let's mark out some of these monthly resistances. And we can mark out our monthly support down here. We really don't want to come down that low. Like, that would totally invalidate our bullish structure. Let's go to the weekly again, and I want to look at this weekly level right here. Have we hit that yet? Weekly, we haven't hit that yet. And even coming down and hitting that weekly, it wouldn't invalidate the wave 4. Now, I have to say this. Hidden bull div just printed on NAMI here. That looks pretty nice. It's between this low and this low here. We have hidden bull divs printing, and now we're starting to rise back up. Remember, a hidden bull div is a continuation, and it's a continuation of your most local trend. And on the weekly, our most local trend is up. This is our more downtrend, and then now we've changed trend by taking out your weekly highs, or even you could even say this high here. So, yeah, ETH BTC is looking kind of bullish here. Now let's zoom in onto the daily chart, and let's look at this corrective range that we've seen, this channel. So we'll pull that channel here, and we're going to bring it down to this first low. And you can see we're in this kind of corrective channel, a couple wicks past it. Let me just adjust here. Let's see how this looks. Yeah, this is our channel, because you can see the midline is being super respected as well. But look at this, guys. This channel was pulled from this high to this lower high to this low, and we came up, we rejected from the channel, made a flat sideways range, and now the last couple of days we're breaking out of the channel with a volume imbalance candle to the upside. This candle 3 days ago was super important. breaking out of the channel with increased volume and an imbalanced candle, a bullish engulfing candle, you could say. It's well, it's not really a bullish engulfing because it's not a red candle next to it, but pretty nice break here. And now we could see locally, now that we've broken out, you could see this boom before coming up, you know, creating this kind of flat range. What I would say now is, well, let's analyze this flat range here. So we have this small range that we've been in for about, what, a month now, since November 4th. So yeah, about a month now. About a month we've been in this range. And what just happened yesterday is we took out the liquidity of the highs of the range. So after a liquidity grab, yes, we could see a small drop here. And we could actually come take out all these semi-equal lows. I do not like this, guys. If we look here at these lows, semi-equal low, semi-equal low, semi-equal low, but this is the range low that we want to take out. And look at all that liquidity that's been sitting and building below it. So yes, there is a possibility we could come down to take out those lows of that range. Let's zoom in now even more, and let's go to our 2-hour chart. And we're going to pull the volume of this range, of this sideways range right in here, sideways range. So we'll pull our volume profile. I'm going to pull it from the end of the impulse over. Yeah, we're breaking value area high of the range too, guys. So this is very nice. We broke value area high. We took liquidity. Now, if we come back for a back test of this general area and hold it, you expect to go higher. Or we could even come a little bit lower to backtest the channel. But as far as our very local structure goes, what do you guys see here? This looks like a 1, 2, 3. We could be in like a flat in here for a 4 before seeing a 5. And let's pull our targets between the 0.382 from the bottom of 3 to the top of 3. And the 0.382 to the 0.5. I'm just going to throw the 0.5 on there because it looks like, yeah, we've passed the 0.32. So we are coming down to your 0.5 right now and bouncing from your 0.5 today in the last couple of hours. We could start to now push up and make a new, more local high, being a 1, 2, 3, 4, 5, pushing up and breaking out. Let's see. If we look at the golden pocket of that move, yeah, it's below the value area high. So we could even come down to backtest the value area high and still be valid to push up to make new highs locally. So it does look like ETH is going to be pumping against Bitcoin. We do have slight bear divs here. You can see bear divs forming, money flow draining out. I do not like that, guys. Think in terms of distribution. Tap 1, tap 2, tap 3, and now we could distribute back down here. We do not want to see that. And the reason why is because look at bear divs confirmed, 1, 2, 3, bear divs, money flow draining out as the range is forming. I do not like to see that. That is kind of contradictory to what we would want to see in a fourth wave here. If this is a 3-wave corrective move, let's actually just look at our targets here for that 3-wave corrective move. I'm going to bring this in a little bit more. Let me just get rid of some of this for a second, guys. We'll clean this up just a second here. We're going to take our trend-based Fibonacci extinction from the lows of 1 to the highs of 1 to the lows of 2. And if we look at our 1.618, okay, here's another thing, guys. We've hit our 1.618. So and we even surpassed our 1.618. So that makes it far more likely that this is actually a impulsive move, not a corrective move. Because in a flat correction, an expanded flat correction, if this was a B, C here, your C wave can at times come up to the 1.618 and reject. But if you even surpass the 1.618 by a little bit, it's far less likely to be an ABC, and it's more likely to be a third wave in a 1, 2, 3, 4, 5. So that's now a couple checks for it being bullish. The one check against this being bearish is this possibly being a distribution pattern here. Bear divs, money flow leaving. We really don't want to lose the low we just made earlier today. What we did do just earlier today is we took the liquidity of the lows of the range, and now we're pushing up above. We want to now start to break this range to the upside. We don't want to reject from our local golden pocket. So if you pull your golden pocket from the highs of your last tap to the lows, you do not want to reject from the golden pocket, which is going to be right where your VWAP is. That is absolutely a no-no to reject from there. Okay? Do not want to come up here and reject. Now, something like this where we took the liquidity, say we come up here, small rejection, backtest these prior highs, and then go, this is okay. We don't want to see any more than losing these little highs right here. Can we come back to backtest them? Yes. Do we want to lose them? Absolutely not. But yeah, and then we could even look at this little volume range here. Yeah, that's the same range I was just looking at actually, but okay, so yeah, it does look like Ethereum, BTC, Ethereum against Bitcoin wants to break up higher. That means Ethereum's going to pump against Bitcoin. Now, zooming out onto the daily chart, we do have some very nice, let's see, is that bull divs? It's not bull divs. Money flow is starting to curve to the upside here. And look at on NAMI, money flow is kind of curving nicely to the upside. We don't want to, we don't want to hit this golden pocket. Really, we don't even really want to take out the ranged lows again. I guess you could come down here and take out that liquidity I was talking about earlier around 0.32, but you don't want to really make a new low below this guy tapping the point of control. We're at major support though. It looks like we're in an impulsive move and it looks like we're going to come higher. Now, where can we come to? We could come to this value area high rate here. And if we look at, let's zoom back out to our weekly and let's look at, do we have any weekly resistance up there? We have a weekly level right up here. Oh, wait, sorry. I was looking at the wrong spot. At your value area high, is that a fresh? I'm sorry, guys. I know I need to zoom in more so you can see this better. Yeah, this weekly level has not been tapped yet. Neither has this one right above us here. All right, so let's mark out that weekly near the value area high. And then let's look at now I'm going to get rid of some of this stuff here. I'm going to hide this channel for a second. And I'm going to get rid of these little guys for just a second to clean up the range. And let's zoom in onto the daily time frame and let's look at our naked monthly points of controls. Come on. It would help if I click the button. Okay, we do have a couple fresh naked monthly points of controls in here. Is that on monthly? Yeah. First of all, I see right away, this area right up here is going to be very, very key. Naked monthly point of control, weekly, value area high. Mark that out right now. That is going to be a very nice resistance area. 0.52, 0.53-ish. But we also have a fresh monthly level that's near a naked monthly point of control. This is going to be a very strong level here as well. And we also have this naked monthly point of control, which is going to be near a golden pocket. And I'm just eyeballing where the golden pocket would be. But let's throw that on there, naked monthly point of control. And then let's look at our golden pocket. So let me hide these real quick. And let's throw our golden pocket on of this entire descending channel. Yeah, golden pocket right at your naked monthly point of control. So guys, if we are about to push up, we could break all the way up to here. At this level is going to be a golden pocket naked monthly point of control. I want to look at our naked weeklies now. And yes, there was a naked monthly point of control just above the highs of this range. We have this fair value gap right here that if we come into that, we're probably going to fill the fair value gap and bust through that naked monthly. There's also a naked weekly point of control there. So very strong level. Also a naked weekly point of control where this naked monthly is. So guys, these are very strong levels. I would say our most three strong resistances on the chart right now are the three boxes that I just laid out here. A monthly level with a naked weekly and a naked monthly above. We also have a daily level up here as well, and the daily highs, some liquidity from daily highs. That's the second pivot of the channel right here. These highs is the second pivot of the channel. Remember, when you break a channel, you often will come up and grab the liquidity of the entire liquidity trail, or at least of the second pivot, which is this guy up here. So I would say if this is about to be bottoming out, forming a accumulation range in here, we're going to break out. We're probably going to come up. We're going to reject from that naked monthly that's around this liquidity, come up, make a higher low, then come up here, reject from here, maybe come down all the way to your golden pocket before coming up here, flip it, and then we might be able to see the break up to much bigger levels. You know, of course, we always have to look at liquidity, but it looks bullish. I would have to say on higher time frames, it looks bullish, and it looks like we could be coming for one of these three boxes. Obviously, of course, we're play level to level. So this box first at 0.388, and then go from there. So I hope this helps a little bit with Bitcoin, but at your macro range, 9-year long range point of control with descending channel, I mean, it looks nice to me. And the higher time frame, 1, 2, 3, 4, 5. I think, and actually we can look at our fifth wave targets. Okay, a way to find your fifth wave targets is you're going to pull your Fibonacci from the highs of your wave 4 to the lows of your wave 4, and you're going to look at your wave 5 targets, which are between the 1.236 and the 1.618. Well, that 1.618 is looking pretty nice there. Let's make sure, based off log scale, we're on the log chart. Holy cow. And guys, the 1.618 gets hit far more commonly than the one. I mean, most of the time your fifth wave will come up to the 1.618. So where is that 1.618? Well, guess what? Right in your most key box of resistance. I said this was the most powerful box. Naked monthly point of control, naked weekly point of control, weekly level, value area high, 1.618 fifth wave target, and there was that daily liquidity of the second pivot of the channel above there. I mean, this looks so nice. We could be seeing Ethereum pump against Bitcoin up to this area. Now look at, this is the daily time frame. This might take 6 months to get up here or 3 months to get up here. But that is, we would look for an impulse, a 1, 2, 3, 4, 5. You want to look for a 5-wave impulse out of here up to that area. Man, Ethereum, let's go, boys. Okay, let's see. I was going to look at another one. Arrow, was it? Or shoot, let me see. AERO. Yeah, Red Xmas. Crypto Wanderer 1. I think we could see a Red Xmas as well. And Crypto Clan World, we'll look at Flux as well. Daily and weekly. Yes, absolutely. Travi Trades, welcome in, man. It's good to see you. Yeah, I want to buy cheap again near the bottoms. Guys, I tell you what, at around 70K, I'll be buying Bitcoin spot. Luciano Sanruic, thank you so much, man. You follow me because of Jason Casper. Cheers from Chile. Well, thank you, man. And cheers and welcome in. I hope you like the TA you're seeing. I hope you like the community. We have an awesome, amazing community here, guys. And I'm part of Jason's community still as well. I love Jason to death. I have no ill will at all against Jason. He's been really great to me. The reason why I stream today is because of Jason. Let me just say that. I would not have started streaming if it wasn't for Jason. I'll tell you guys this. Look at, we had this marked out. Golden pocket, value area high. Came right up to it, rejected, and now we're coming down to our key support level. Weekly level, value area low, daily level, golden pocket. This area right here, I would say on the daily time frame, it does look like we're going to come down here. And the reason why is because we've broken our POC. Look at, your POC was kind of holding a support in this little bit of a range here. We broke down below it, and now it's likely that we continue down here. Also, this could be like a 1, 2, 1, 2, 3. Actually, you can't do that. If anything, this is a complex correction in here because there's overlap. There's overlap between these two highs. We could even say it's a very rare WXYXZ in here. Or you're looking at some sort of 3-wave corrective move with your bigger 3-wave corrective move, a little X in here, and then this is your Y, WXY, and your X generally is way smaller than your W and your Y. And then followed by another 3-wave corrective move. And this could all be part of a bigger boom, boom. And then we want to see a 3-wave corrective move down to here. It's a bit confusing. So when you're not sure about the Elliott waves, just mark out your levels of support and resistance, and then you go from there. So we did reject from the level we were looking at, naked daily point, or I mean, golden pocket, value area high. Okay, and then let's actually clean up this chart and refresh it. So weekly levels, this weekly level we can get rid of because it's been tapped. This one's still fresh, and this one's still fresh. Okay, monthly levels. We do have a new monthly resistance on the charts. And our monthly level of support is the same pretty much as your weekly. That green box right here, guys, is a monster support level for Aerodrome. And then let's go to our dailies. On our dailies, let's pull this all the way. Look at this, man. Okay, here's the thing. This box, I have it up to the daily level because your 0.618 is there as well. Oops, didn't mean to do that. You have a daily level at 5513, and your 618 is pretty much right there. But the real, if you want to snipe this thing, the real support is this guy right in here. And I'll make this a blue within the purple. So between, what is that? 51.7 and like 50 cents. Man, that's nice support level. Monthly level, weekly level, value area low of your long range that goes all the way back to March of 2024. And it is your macro golden pocket. Golden pocket, higher low to break up and make a higher high, maybe taking out that liquidity. And this could be, guys, this high is higher than this high. So we can't call this accumulation yet. If this is your tap one, or distribution, excuse me, this is a tap one. Your tap two always has to be higher. Whether it's a model 1 or a model 2, this always has to be higher. So we can't say that's tap 1. We can't say that's tap 2 and this was tap 3. We cannot say that. We could say, okay, guys, this was a high. Well, we're just in a sideways range here. And we're coming down to the lows of the range. And remember, just as far as range trading goes, you long near the lows of the range, you short near the highs of the range. If you shorted this near the highs of the range, it was also your golden pocket. That was a very good trade. Now we're coming up to major support level between 55 cents and 50 cents, but really between like 51 and 50 is your 51.5 and 50 is your banger of a trade. I would be saying, let's look at seeing if we can continue down here to this level. Do we see bull divs on the chart right now? Not on Market Cipher B, not on NAMI. No bull divs between these two lows on the daily. So that makes me think that we could come a little bit lower. Do we see 4 hour? No bull divs on the 4 hour either. Okay, no real bull divs on the 4 hour either. Let's go to the 8 hour. No bull divs on the 8 hour either. Money flows draining out on the 8 hour. You confirmed on this high a red dot and momentum wave topped out. Momentum wave topped out. Money flow draining out again. So yeah, all indications to me that we are going to come down to this green box. Now, once you get to this green box, this is like potential swing long opportunity time. Potentially swing long opportunity. So, geez, man, that is what I'd be looking at. Now, more locally, look at, you could play this as a tap 1, tap 2. If we come down to golden pocket, a tap 3. And we might see this first. We might see that kind of inverse head and shoulders, left shoulder, head, right shoulder. And we might break this up to back test the POC before coming down there because we have not tested the POC. We have not bearishly back tested the POC yet. So just be aware that that could happen before we come down to that green box. Also, if we look at this little price action on the daily time frame, look at this fair value gap that was in here. This big bearish engulfing candle or this big bearish imbalance candle in here. If we start to break this range up, there's nothing in here that's going to stop us. I'll show you guys the fair value gap. If we turn on our fair value gap, well, I guess, okay, never mind, because this wick. But this area in here, there's not a lot to keep us from coming up unless there's the naked daily point of control. So now we can look in, let's zoom into the 4 hour and let's look at this structure here. Do we have any naked daily points of control in there? First, we'll look at naked weeklies. No fresh ones. No naked dailies either. So looking pretty good. Now let's pull our golden pocket from the lows to the highs. And we're hitting into the golden pocket right now. Do we, okay, this is a little bit of a fair value gap right in here. Look at, I'll show you that. little bit of a fair value gap right there. Boom. See that fair value gap? Fair value gap is pretty much where there's a big imbalance within a candle. And oftentimes, if you fall into the fair value gap, you'll either bounce from the 50% mark or fill it fully. But you can see the top of the fair value gap. Sometimes you bounce from the top of a fair value gap. And where did we wick to just now? The very top of the fair value gap, into the golden pocket, into the very top of the fair value gap. Actually, it wasn't the very top. You can see this gray part here was the very top. But yeah, it's golden pocket and pretty much the start of the fair value gap. Do we have any naked daily points of control in here? No, we do not. So guys, if we don't bounce from this area, then we probably are going to come down to take out your lows. But here's what we can look at. Did we break market structure bullishly, locally? Yes, we did, because we took out these highs. So that's a higher high, right? Because we were making, I'm just going to go from here. Lower low, lower high, lower low. Okay, that's still a lower high, but that was a higher low, lower high, higher low. So this is a little bit of a consolidation channel there. And then we broke it down, making a lower low, but this is your first higher high. By breaking this, you're potentially breaking market structure bullishly. So because we made our first break of market structure with this guy right here, market structure break, right? Now that we've broken market structure bullishly, you have a higher probability of creating a higher low before creating a higher high. So now locally, this is the area we want to bounce from. We're pretty much coming up into support right now. If we bounce here, then we might come up to test your POC before ultimately coming down to your macro support. And when we get down here, this is like a long area for sure, especially if you see bull divs. It's such strong support is what I'm saying. But you might come up to your POC first. And let's look at, I was going to look at low time frames, 1 hour chart. This drop down, do we see any bull divs on this drop down? Well, on Market Cipher B, no, we don't. Money flow looks pretty bad here. NAMI is showing slight bull divs. Look at three momentum waves as we're making lower lows into the golden pocket. NAMI is quicker. NAMI's money flow is starting to come up here on the 1 hour. Let's look on the 30-minute chart. I want to see some more from Market Cipher B. Do we see any more from Market Cipher B? Yes, we are starting to see more from Market Cipher B. Lower lows on the price action, higher lows here, and look at higher lows here, money flow coming up here. So this, we might take out the low one more time, like this local low we made, 3 hours ago? But it is at support, and yeah, maybe we are going to see a bit of a bounce here and come up to your point of control. If we SFP this low from a few hours ago, I might look at even taking a scalp long from that opportunity. Let's mark this and set an alert here. There we go. Okay, so that is what I would look out for arrow for right now. Coming up to 78 cents. Like, so say we do this. We long the reclaim of this low. Maybe we put our stop. I'm assuming the wick is going to, it's not going to really break too much past this 0.65. So we put it something like this, and we'd be targeting, the first TP would be targeting these highs. That's already a 12-1, but you could say, okay, we're going to come up here, 16-1. And then from here, I would be looking for a short. That's not a short. I would be looking for a short down to 55 to 51 cents. And your stop would go somewhere above those highs. And that's a 15-1 risk reward trade too. Now, see how this move from here to here is way shorter than from here to here. That's a way shorter move, but you would actually make more money on this trade because your risk is better. Your risk reward ratio is 16 here. It's only 15 here or 14 here. So that's why it doesn't matter the size of the move. It matters how good your entry is, how good tight your stop loss gets. Okay, Flux. Let's look at Flux real quick. Ooh, okay, wait. Flux USDT. I'm going to check it on Binance. All right, looks like we've looked at this in the past. Gosh, I need to zoom in here for a second. And We have this channel, which we can delete. I haven't looked at this in quite a while. I think the last time I looked at this was in this general area back in December of 2024. So like a long time ago. Let's just do this. Remove 16 drawings. Okay. Now I will throw that pitchfork back on there because it looked like it was being respected. This is your bearish pitchfork trend on the weekly. We are near the bottom of the pitchfork and we are starting to bounce here. Your October 10th crash, or actually this was, October 10th crash in here, wicked you below the pitchfork, but you're holding it overall. Let's mark out some levels here. So this weekly's been taken by this high. This weekly has not been tapped, and it's going to be near the top of our pitchfork. And this weekly's been taken. And we have a possible weekly that can confirm in a couple days, but it's not confirmed yet. And then I would look at even this weekly here, just because it's probably going to be around your golden pocket. So now I want to pull that golden pocket of this entire bearish move. Golden pocket, it's got to go on log scale. Okay, yeah, that weekly near your golden pocket is going to be pretty nice. You'd also be, this is a weekly order block in here. You see this weekly order block? A bunch of red candles, one green candle, a bunch more red candles. So this weekly order block here that's untapped. Daily level, man, this does look. I don't like this though. Let's see here. From the lows to your dead cat highs to your lows. I bet you ABC target, you rejected exactly from the 1.236. That is not good. That means that this could have been a 3-wave corrective move, and now we are right about to go back down and take out these lows. I don't like that. That's my first sign of real concern. 1, 2, 3 wave corrective move right into your freaking target. And it was your pitchfork upper band. Gosh, not looking good there. But if we are about to move down, then we want to look for a 5-wave impulse. A wave 1, wave 2, 3, 4, 5, and taking out these lows. So what we could look at is looking like we want to bounce at the bottom. Now, at the bottom here on the daily time frame, NAMI is showing bull divs. Lower lows here, higher lows here. Your money flow looks really bullish here on Flux. Market cipher B, very slight bull divs. Look at that. Actually, it's more like equal lows, but your money flow is bottomed out and is starting to come up. I would say this green candle we're seeing today is a bit encouraging because we are at the bottom of the pitchfork and you're seeing some bull divs. So what I would look at, because this was a possible ABC correction and we're about to do a 1, 2, 3, 4, 5, what I would say is you might attempt a long in this general area, but I would be looking for my TP around the lower high golden pocket. This golden pocket, and of course, where's it coming in at? Your pitchfork midline. So 20 cents, 20 to 20.8. That is very, very key right there. There's no daily levels within this structure to the downside except for that little guy there. We can mark that out. This is also probably going to be a rejection area because it is the daily level in confluence with the bottom, bearish backtest at the bottom of the pitchfork band. So we could do this, or we could do, boom, small rejection, get above. That's your 3-wave corrective move. And then you come down for your 3, 4, 5, coming and take out these. And let's look at our naked weekly points of controls in here. Where are you at? Where are you at? There we go. That's also a naked monthly too, right there. Okay. That's for this month. No, that's for last month. This is the new month. Okay. So let's mark that as a naked monthly instead, because higher time frame, the better. And then let's look at our naked dailies real quick. I'm hoping we get one right up here. Yes, perfect. Okay. So guys, this is looking very nice here. Naked daily point of control at 20 cents. 20 cents is major resistance on flux. And with the way that this was a 3-wave corrective move here, right up into your target, I would be, my bias overall would be this could be a wave 1, a wave 2, before coming down in a wave 3, taking out, you might not take out the lows in 3, you might take out the lows in your 5th wave, but you could come down to take out those lows. This area, this naked monthly point of control at 18 cents, I would worry about that. And then this daily level here, I would worry about that as well. Kind of your 3 zones of resistance ahead. Daily area at 13.9, let's just say 13.9, because you have the pitchfork band there. This level here, I would look at a small rejection. Say we do something like this: reject, higher low, come up here, wave 3, reject, 4, 5. We want to see a 5-wave impulse, a 1, 2, 3, 4, 5. Actually, you don't want to see an impulse within a wave 2 overall. If this is a wave 1, this is a wave 2, but you are looking for a 3-wave corrective move. So maybe something like this, a 3-wave corrective move, or that. But within this, you're looking for an impulse, and within this, you're looking for an impulse, subcounts. I don't know what this is going to do, but I do know that this is strong resistance right here. 20 cents-ish is very strong resistance. I would also be looking at that daily level in confluence with that pitchfork band. And then, of course, keep an eye out on this 18.38 area. Now, if we zoom in here onto the 2-hour chart and we look at this little bottoming range that we're forming, this bottoming range here, we might come down, tap 1, tap 2, we might tap 3, and then shoot for a break up here. So let's pull the volume of this guy. All right, we're at value area high. And then let's look at our golden pocket from the lows to the highs. Let me get that on right. Yes, okay. And let's make sure that's not log. Golden pocket. Yep, there we go. Okay, I do like that. I like this a lot because look at this liquidity into your golden pocket, into the bottom, and your value area lows close by. So we might wick past the value area low into that golden pocket in the bottom of the pitchfork. So you might look for a scalp long opportunity in this general area. Liquidity grab, golden pocket, value area low, pitchfork. Seeing that rounded bottom, tap 1, tap 2, tap 3, inverse head and shoulders, whatever you want to call it, model 2, accumulation, and then push up TP1. I would at least TP1 some here. Even if we're going up to 20 cents, you're probably going to break out, reject from this area just to back test these range highs, and then you could break up here, back test, and come up. So I would be looking at that. And if you reject here, take some profit, and then when you come back to back test your value area high and your prior highs, you can compound the long here. Overall target I'd be shooting for is 20 cents. At 20 cents, I would really be looking to flip short. Let's do this. Okay, so I hope that helps a little bit, Crypto Clown World. Let me check the chat. Okay, can you state the price points? Yes, I'm sorry, Crypto Mine 64. Yes, I can. Back to Bitcoin. Let's go back to Bitcoin. Bitcoin is continuing to just chop here, guys. I do think we're coming down to the golden pocket at the very least. Golden pocket. It's also a naked daily point of control down there. I need to mark this. Let's just do this. Oops, 87. 87K is a naked daily point of control. Let me throw that into my folder. And it's our golden pocket. So I might look for a scalp long from this opportunity, but guys, I'm looking for new lows to come in. So now that we've finished our potential ABC, wave 1, wave 2, wave 3, 4, 5. That's what we want to see. And on this dump here, you want to see a lot of volume coming in. A lot of volume coming in. Okay, let me go scroll up in the chat and read the chat here. Man, it's so hard to keep up, and I'm not even a big channel, guys. So if I miss your comment, I'm really sorry. I'm not trying to. It's really hard for me to make get everyone's comments in here. So yeah, and okay, no, I get you. Afterglow Gaming, no worries. No, there's no disrespect. I don't take anything you guys say. You guys are all super respectful. I really appreciate how awesome all of you guys are. And yeah, and if your TA disagrees with mine, that's totally fine. Actually, this is a good swing. This is a good long area for Solana. I mean, yeah, I do think this is a potential spot scalp. And look, it played out. Damn it, it's playing out. 12-minute. We didn't come down to the golden pocket yet, but this is playing out, and we did have some confirmations here for some longs. You might come up to this 140. Yeah, money flow bottoming out here. I mean, I'm going to be patient and wait for one more little dip down. If we get one more little dip back down, I am probably going to scalp long this opportunity, and it will probably be after the stream. So guys, I'll post in the Telegram if I long this. Solana. Does this Healing Shila company have good reviews and all good ingredients? Yes, David Hornback, they do third-party independent testing, and you can actually, for each batch they get, you can get the actual test results showing you if there's any harmful metals in there and stuff like that. So I did extensive research back in the day when this was on and when I first got on that stuff, and it does seem to be the best one. The higher the mountain range it comes from, the better. And I think this one was all the way up to like 18,000 elevation, which is really big. Okay, grow your own food. Yeah, grow your own food. What you buy at the store isn't even food half the time. Travi, I would say it's not food 3/4 of the time. Like 3/4 of the time, it's processed chemicals that are just not toxic enough to kill you right away. You know, slow death. But at the same time, I say that, and I still shop at the store. Yeah. Tiki Taku, raw milk. Dude, that's awesome, man. Yes, carbon 60 is an antioxidant. I've heard that, and I heard it eliminates free radicals in the body, really helps with skin and age, stuff like that. Let's complete the ETH discussion on the charts. Okay, ETH. Let's see, who was that? Vish Esh. What exactly do you want to know? ETH is coming down to a local support level, being that 0.5 Fibonacci and naked daily point of control. If Bitcoin comes down a little bit lower and ETH actually hits this 0.5, it could be a scalp long opportunity. I would warn you, we did have some pretty big bear divs, higher highs, lower highs, and money flows consistently draining out now. Bear divs here, money flows in the red here. Let's see, Ethereum's golden pocket. I'm going to leave that 0.5 and I'm going to repull the golden pocket. The thing is, first off, guys, this is why fair value gaps are important. You see how we had a quick move down through here. So on your way back up, you're going to bust straight through it because there's no resistance in here. Well, now, because we had a quick move here, we busted straight through it, but that also left this now here. There's not much here. So if we lose this 0.5, we're going to bust down to the golden pocket very quickly. Do we have a naked daily point of control in there? No naked daily points of controls in there, unfortunately. The thing that's concerning me with Ethereum is we rejected absolutely freaking perfect from the bearish backtest of our pitchfork midline. Like, you can't get a better backtest than this. 3-wave corrective move, backtest, pitchfork, midline. Now, are we going to come down to make some new lows here? On Bybit, this is Bybit USDT. The volume levels are different from Coinbase. Now, you guys know that if you follow me for any amount of time, I follow Coinbase volume levels more than anything. But if we look at our upper range that goes back to March of 2024, kind of this upper price action in here, the value area low of this range at our macro logarithmic golden pocket pulled from your $1,400 lows up to your all-time high. You have to put the golden pocket on log because this is more than a 100% move to the upside. This is like a 250% move to the upside. So you want to be putting that on log scale. It's also the bottom of your pitchfork band. I mean, guys, if we bearishly backtest this midline and reject, yeah, we might come down and bounce from the POC, make a lower high, or even make a flat and then come down here. But I really think we might be dropping over the next couple of months, especially if Bitcoin does drop to 74 or 70K. I think Ethereum's going to drop to 2,200, 2,250, where this, for me, in 2,160, gosh, it's going to be a great long opportunity. But for now, on Ethereum, the fact that we're rejecting in a 3-wave corrective move, we came up to bearishly backtest that pitchfork midline, and we are rejecting right here, is very concerning to me. Very, very concerning. Also printed bear div here on NAMI, a hidden bear div. Actually, it's bear div on the daily. Higher highs in the price action, lower highs in the momentum waves. So it is a bear div here. Okay, so let's zoom in onto the 2-hour again, and let's pull the volume of this this corrective structure. Okay, you're at your POC, and that's kind of why we're stopping where we're at. But look at the value area high of the range also rejected us. Value area low is going to be near that golden pocket. No, it's not. It's going to be near the 786. So I would say, and with this big fair value gap in here, this big imbalance candle, guys, it is far more likely that if we kind of lose the 0.5 in the naked daily point of control just below us, let's make sure that naked daily is actually fresh. Wow, why do I have... Okay, wait, let me go on to Coinbase chart. Is that an old naked daily that I have marked out here? Did I not delete it? It was an old naked daily. I'm sorry, guys. There is no naked daily here. And this one's from today's price action, so you're not marking it out because it's not confirmed yet. Shoot, if we lose... Okay, I'm sorry about that. If we lose our point of control that we're at right now, if we lose this, I think we're going to drop to the 786. Your 786 down here, because look at this gap in here. There is nothing to hold you up. Yes, your golden pocket's in the middle here. I don't think you might see a small bounce from golden pocket to backtest the POC before coming down here. But in a bullish scenario, you want to kind of make that 3-wave corrective move anyways. So you could see a 1, 2, 3, 4, 5, that 5-wave move. And then you want to see a backtest the POC and then a 1, 2, 3, 4, 5 down to your 786. But at 28, like 28.30, 28.29, that's where I would be looking for the next support for Ethereum. Based off of our levels, we don't have anything within that big structure in here to keep us from falling straight through it. Just like here, when we fell down quickly, we busted straight through it quickly. Now, if we lose this like kind of consolidation here, we're going to fall through it. So for me, Ethereum, that is the next level I'd be interested in looking for a scalp long opportunity. And if it's a bullish scenario, a wave 1, a wave 2, internal wave 1, internal wave 2, and then you'd want to break up in a wave 3. And that would bring us, I would say our wave 3 should bring us to 3,600, where your 4-year long range value area high is in back confluence with the bearish backtest of your upper band of the pitchfork. Remember, we're bouncing from the midline of the pitchfork. And the way pitchfork trading works, you look at as far as macro trades, of course, you're going to get scalps all in between all this. But as far as the macro higher time frame works with pitchforks, and I've shown you guys this for about a year on the channel. By the way, yesterday, YouTube told me that yesterday was my birthday. It was my YouTube 1 year from when I created my YouTube channel. So I'm really happy that I've been going for a year now. But here, pitchfork levels, right? We were holding it as support. Once you lose it, you expect the backtest. If you reject on the backtest, you expect the fall to the next major level. If we bounce from this level, we expect and can hold bullish structure, we expect to move back to a higher time frame backtest. If we reject, we expect at least another, well, it doesn't mean all the way down. You could make a higher low and then break above. But if we hold this overall and start to break kind of this range to the upside that we're forming down here, then I do think we're going to come up to 3,600. And then depending on what happens here will tell us everything. But the way pitchfork trading works, major level to major level. And yes, you can get multiple tests of it and the back test of it, multiple tests of it. And then if we do, what's more probable to me, especially if Bitcoin continues in a downtrend, we might even see this though, guys. We might see this range for a bit, come down to the 786, make new lows, reject, and then kind of work your way down to where the golden pocket's in confluence with your pitchfork band. And I think that's most likely if we are going to go into a little bit of a, till the first quarter of 2026, Bitcoin's going to drop to 70K. Ethereum's going to drop to 2250, 2150. And that's where I would be looking for absolute swing long opportunities. We don't know, guys. Right now, if we're being objective and honest, we have to say that our market structure is bearish. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Is this a lower high before making another lower low, then another lower high before making another lower low, another lower high before making another lower low, and then finishing, and then parabolic. Yes, okay. Lotus Blooming Herbs Himalayan She Legit is the one I got. Okay, I just use it raw under my tongue. Wow, Mind Tapestry. If you're that stuff is strong though, huh? I've gotten so used to it that I can just stick the tar ball in my mouth too. Now I would say it's very uncomfortable tasting, but I do that too, and it's a super boost of energy. Yes, Friday with the boys. That's right, Time Attack. Thank you for being here. Guys, all of you, thank you for being here with me on a Friday. Remember to enjoy your weekends. You guys often see that I do not post much at all during the weekends. I do have a family, and weekends are family time for me. And it's important to have balance in your life. So I know that at times we can get addicted to the charts. We can get addicted to just staying glued to the computer. But please have balance in your life. I swear it will make you a better trader as well. You're going to miss some trades over the weekend if you're not constantly looking at the charts over the weekend. But especially Saturdays, it mainly goes sideways all day Saturday. There's not much that happens on Saturdays. So if anything, enjoy Saturdays with your family and have some balance in your life, because I promise you that will help you in your trading as well. Okay, yes, 1 and 3. Okay, studies have all tell me. Okay. I'm just reading some of the chats. Lily Willie, thank you so much for that comment. I love you guys too. I love you guys so much. I love this community. I love these live streams with all of you, and you guys are all so nice and supportive. And even if you guys disagree with my TA, you're very respectful and kind about it. And I actually appreciate that. Like if you don't agree with it and you speak up about it, I don't take it personally at all. And I actually like to see contradicting opinions if you really think that, because it helps me analyze my trading to make sure I'm just not having a bias and stuff like that. So I appreciate all that you guys do and say in here. And I really think we are building such an amazing community together. Like I'm so happy for what this year, yesterday was my year-long birthday in the YouTube channel. And I'm really happy with what has developed here. Okay, Turbo, we'll do Turbo real quick. And guys, I have to get going soon, but I'm going to look at Turbo really quickly. We'll go back to Bitcoin and then, I'll get out of here. So if you don't want to stick around for that, I would recommend you guys could take off right now. Just depends on what you guys want to do. Turbo is rejecting from our resistance area this weekly naked daily point of control, and it was a liquidity grab of sorts of the second. Look at guys, for instance, we were descending channel. The descending channel was pulled after the dump, right? So we had this descending channel after the dump. We hit into we took the liquidity of the lows, and then we broke the descending channel up. Okay, hold on. Let me get this. Let me get rid of this golden pocket. This golden pocket was at the top of the channel, but we didn't reject there. But look we had our descending channel. We took liquidity. We kind of had a deviation below the channel to take liquidity. We broke up to our resistance, back tested the channel bullishly, held it as support, so we came up and made new highs. but it was just an SFP of the highs, but we're still rejecting overall from our resistance area. Yes, some wickage past it, and the wickage was to take the pivot of the second pivot liquidity of the channel. And I say when we break these channels up, oftentimes you will break up to at least grab the liquidity of the second pivot. So we're seeing exactly what the analysis was suggesting if this was going to happen. Like, this coin is trading very technically, I would say. And upon the breakout of the channel, after taking liquidity, you dropped and you bullishly backtested the channel. You held it, so you made a new high. Yes, it was just a swing failure pattern, but it was still a new high. Now that we've swing fail patterned that high, though, this high here, it does look like we might be able to drop back down and see a flat here. This might be a push up. You have your flat, your A wave, your B flat, and then your C wave would want to come down and take out these lows, and then we might be able to continue pushing up here. On the other hand, it's going to be bearish if we do a 1, 2, a 3 wave corrective move, and then if we take these lows and don't get back above them, I would expect us to come take out these lows. So let's look at now our new levels of support and resistance. I want to zoom out to the weekly real quick. Okay, this is going to be a new weekly support level. And we can get rid of this weekly. We can get rid of this naked daily point of control. And our next big weekly is up here. But yeah, this is a weekly, but I like this purple box a lot better. Let's go to the daily here. And yeah, this daily, look at the daily. There's a daily level up here as well. And that daily level, the liquidity from that daily level is right up into our purple box. This purple box up here, guys, is going to be important. And I would even extend it just a little bit here. It's going to be your golden pocket. And actually, that's not the golden pocket anymore. Let's pull that. That's your new golden pocket. Okay. Whew. And this was your prior range that you broke down from. This is a little bit tough now because now I would say we have two different levels here. We have our value area low weekly and naked weekly up here as a potential resistance. And then I would say your golden pocket daily level is another resistance now. But let's look at some of the, and then I want to mark out this daily down here. I want to throw that on the bottom of the green candle. And let's turn on our naked weekly points of controls. Okay, let's look at our naked dailies. Ooh, okay. Let's mark that as a naked daily, and then we'll get rid of this one. That's no longer useful. And of course, the naked daily PVP doesn't go back as far, so I don't know if there's any naked dailies up here. We are rejecting from resistance. We did take the liquidity of the second pivot of the channel. We backtested the channel. We can get rid of the channel now. Channel did its job. What I would be looking at here, guys, is a potential bottoming reversal pattern. Left shoulder, head. If we come down, right shoulder here, you got that kind of inverse head and shoulders or a model 2 accumulation. So I'd be looking for a bigger range to form in this general area here and hopefully break that range up to your golden pocket area, weekly area, something like that. You know, you would have to pay attention to this daily at 0039 because your golden pocket's there as well. Ooh, okay. This looks like a kind of wedge here that could break up. But if it's going to be a flat, did we take the liquidity? Okay, here's the thing, guys. I don't know if we took the liquidity, actually. Let's see here. It's a double top. So you did not actually, you didn't even double top there. Because we did not take the liquidity of this high, we might see a move here to take that and then drop. I mean, this is a flat target, though. The flat does not have to take the high. You could be still seeing a flat in here. And the target for the flat, because you can reject from the 0.9 Fibonacci, and then your target is still to come down to take out these lows. So with your daily level down there at those lows, real close to those lows, and then let's pull our golden pocket here, golden pocket. And yeah, golden pocket's right where your daily's at. Let me see something here. 117% move. Let's put this on log scale. Yes. Okay. Perfect. Guys, this is so nice. So here's the thing. Even if it does look like this could be a flat here. And if we come down here and we take out these lows into your daily level and your golden pocket, you could long, at least to come up. I'm not saying all the way up here. I'm saying this could be a long to grab this double top. And you could be forming a sideways range in here before either breaking up or breaking down. So for me, yeah, I would be looking at a scalp long opportunity at this daily golden pocket area. And there's a liquidity grab in there. Remember, liquidity is the most important thing. It's also the target for the flat correction. If we look at our flat correction, lows, highs, lows, highs. Yep, your 1-to-1's right in that golden pocket. Right there. So that's what I'd be looking. This box right here is absolutely a long opportunity between 0018 and 00172 or 1738. 173, where that 0.65 is. Now, let's throw the 786 on there as well. And if you lose that, your next level of support is going to be the 786 in confluence with your naked daily point of control. Okay, those are the two levels of support I would be watching on this thing. Now, you do have the weekly level down here, and there was a naked daily, I believe there was a naked daily point of control down there. No, there wasn't. Okay, sorry about that. Because if we come down this far, you're probably going to, if we do somehow come down that far, we're probably not going to bounce from the weekly, but we're going to grab the liquidity with a wick and close the daily candle at or above this thing. But with us possibly creating a left shoulder ahead and a right shoulder coming down to either the golden pocket or the 786 could turn into a swing long opportunity on turbo. So just be aware that that's there. Okay, community does matter, Quiles, and thank you guys. I mean, I really do think I have an amazing community. Crypto Mine 64, I do think if we're going into a bear market, Bitcoin can get to 54 easily. And 54 is a target I'm watching. There's a weekly level there, and there's a pitchfork level there. Speaking of naked daily, where's Mark? Sudeep, that is so funny. Yeah, no joke. Oh, Darren does things. Welcome in, man. Welcome in. You only trust Binance or Bybit volume levels. I'm a volume maxi by multiple methods. Volume profiles, vector candles, volume footprint. Coinbase is okay, but definitely should not be the first choice. Well, Darren does things. In my testing, most of the time the Coinbase levels are respected more than Bybit. Like in my testing, and I've shown it multiple times in this year of my channel, especially on altcoins, the volume levels are far more respected on Coinbase than on Bybit. It is a spot exchange, and it's the largest exchange in the United States. Respectfully, I have to say that I think that Coinbase is better than those two, but they're both great, right? And that's why I don't just keep Coinbase on my charts. Bybit's right underneath it. I'm looking at both of them. I'm comparing them. I'm looking at, that's why for instance, with Ethereum, right now, Ethereum, we came up to the anchored VWAP, which is a volume level in confluence with the pitchfork, and we're rejecting. But if we go to the Coinbase chart, that anchored VWAP is a little bit higher at 33. So in this case, Bybit did work better. It was the Bybit USD pair we rejected from the anchored VWAP. Coinbase didn't, and if we look at that anchored VWAP, the same anchored VWAP, it's a little bit lower. So yes, some of the times Bybit does work more. in my opinion, in my experience, I have seen Coinbase overall, especially for Bitcoin, man. The volume levels on Coinbase do tend to be a little bit better, in my opinion. But either way, I check both of them and I pay attention to both of them. And generally, they're not too far of a difference. I will say this on Ethereum. Let me zoom out to the daily chart. On Ethereum, the 4-year long range. So if we look at this range that goes back to May of 2021, so almost 4 years long, look at what happened here. The value area high of that range is at pretty much 3,600 on Coinbase. If we go to Ethereum, the value area high of that same range is at 3,800. Let me make sure that is pulled right there. Yeah, 3,800. No, sorry. This is the smaller range. Let me hide this guy. The 4-year long range, it is at 3,100, 3,150. Well, look at what happened. This back test right here was so key because we were forming a distribution range above the value area high. Let me go back to this chart. We were forming a distribution range above the value area high at 3,600. You can see that's right here. We lost it with volume to the downside. Then we bearishly backtested it. When we bearishly backtested it here and rejected, we fell all the way to your next major pitchfork support level. But on Bybit, the value area high is all the way down at 3,200. And look at, we're chopping in between it both times here. So, to me, yes, you did bounce from it at these lows here. And it was also a pitchfork midline of a different pitchfork. But I think that in this case, the Coinbase value area high gave us this bearish backtest. It was also in confluence with that upper band. And we were looking for shorts up here. And that's exactly what played out. And we dropped to the next major level. Also, if we look at this 4-year long range, the POC of the 4-year long range, the point of control is at 1568 at near the bottom of the pitchfork. I mean, we'd have to dump very aggressively to make it down there in time, to have time confluence. But if we look at Bybit, the POC is, well, yeah, it's in the same spot, pretty much 1586 or 1600. So pretty much the same spot. There is a weekly level down there, a fresh weekly level. Either way, I look at both of them. So I understand what you're saying there. Let's see. Is that what Divine said earlier? I'm not sure. Do you think BTC will go back to 89.9 for a rest before dropping, before a retest, before dropping again? 89.9. Let me zoom in here. It's possible that we could go to 89.9. The thing is right now, this is starting to look impulsive to me. Let's look at our volume here. See how volume is spiking on this drop on the break of the range. This was like a little mini distribution range, just like this was in here. Remember, bear divs forming on the 2-hour. Let's go to the 2-hour chart. And as we were forming this holiday weekend range, bear divs, money flow draining out. It was likely to distribute down. Well, yesterday I told you guys before this broke down that this was likely to be bear divs, money flow draining out, a distribution range, and we were going to break down. But we have not come to our support level yet. Naked daily point of control in a golden pocket. So yeah, we might see a small back test of the VWAP before coming back down here. But I do think it's probable that we do come down to this area. And you can see upon losing the range, these range lows, like right in here, what happened? Huge spike in volume. If we zoom in onto the 30-minute chart, and now let me get rid of all this chicken scratch on the chart. Upon losing this anchored VWAP, huge spike in volume on the dump to the downside. And look at, you bearishly backtested the anchored VWAP. So what happened here? Lost the anchored VWAP, bearish backtest, you rejected, and that's when you got your waterfall down. Volume increasing here. Now, on the move up that we're seeing right now, volume is important. On this little ascending channel move up that we're seeing right now, volume is decreasing, making it more likely to be a corrective move up before continuing down. And if we want to get real technical on that, we could zoom in onto like the 5-minute chart. We could pull a channel here and look at how nice, look at this volume here. As we're moving up in this ascending channel, volume's going lower and lower and lower. So I would say you could pull this channel. I would even pull it like that. And look at your midlines being rejected, midline being respected for a small bounce here. Hey, if we start to close this 5-minute candle below here, we could see a dump right now. We could see a little bit of a dump come in right now on this thing. And let's see if this happens. Let's just watch it real quick here to see if this happens. I want to see probably a 15-minute close below this candle, or at least a 12-minute candle close. Got 2.5 minutes here. So let's kind of see this, but we could be about to lose this thing right now and about to kind of drop back down here. And upon this drop down, you would want to see volume starting to increase a little bit. Oop. And yeah, you guys get what I mean. Let me get rid of some of this here. Oop. Okay, ETH runs against Bitcoin after Bitcoin has topped again. Yeah, we can see ETH run, because remember, we checked ETH BTC earlier. What Sol have you checked yet? Yeah, we checked Solana. Solana is at a support level where we could see a little bit of a swing long, or not a scalp long, sorry, scalp long opportunity. We're at support of the golden pocket and your pitchfork band. We want to see like an inverse head and shoulders in here. So left shoulder, head. If we come down to this golden pocket at 131.5, I might be looking for a long here. And that long would just be coming up to 140-ish. Let's zoom out to the hourly chart. So you can see on Solana, we took liquidity of these semi-equal highs. Let me throw this on there. And remember, we shorted this last Wednesday during the live stream, or right after the live stream ended. I posted in the Telegram that, guys, I am entering short. We had a TP1 at this 130 because that was the golden pocket. And then I took another TP2 at the value area low, and I was 85% out of that trade when I got stopped out on the rest of it. Now, after that happened, after we were pushing up right here and we were in this area on Tuesday, remember, we were right in this area on Tuesday, and I said, guys, I'm waiting until we take these highs. And if we take these highs and then fall back underneath them, it's another short opportunity. And so, I did enter a small short, but I took profit way too early. I took profit in here when we were kind of chopping. And this was our next level of support here, where we could see a small bounce to back test before coming lower. Because overall, we're looking at like Bitcoin, Ethereum, we're all looking at this as a possible 3-wave corrective move before dropping down and taking out the lows here. But if this is going to range more, remember, we're at the macro value area low of a 2-year long range and the macro POC of a 2-year long range. So oftentimes you'll form these accumulations where you kind of get this range that forms in here. Now, because we hit the 886 here, like I said earlier in the stream, because we hit the 886, pulled from this low to this high, it does make it more probable to take out this low. Let's see 886 rule in a downtrend. And 886s often bounce you in sideways ranges. So that makes sense there. We took out the liquidity up here. Now, yeah, could we bounce here for a lower high before creating another lower low, something like this, a 5-wave, a 1, 2, 3, 4, 5 to finish? Yeah, and we could even come down to 110. 110 would be major support for me at the bottom of the pitchfork. But could we look at a scalp from here? Yeah, we sure could. And you pull that golden pocket. It's already pulled on the chart. That golden pocket from the highs to the lows. Your golden pocket right here is where your internal liquidity is. You see we have this internal liquidity right here into it at 140.76. And now that we're going into the weekend, this might be a slow sideways corrective range until we do that. And it would be right around your pitchfork band and right around your golden pocket. And then you would see, your third wave. You would see a 5-wave impulse within the third wave, and then another 4 and another 5. Maybe not down that low, but you get the idea. Okay. All right, guys, I do got to get going. Let's check Bitcoin real quick. Did it break that channel down? Yeah, it's starting to break the channel down. Look at this. I bet you we're going to see this thing start to dump with some volume coming in. Can you sell old seed phrases though? I have no idea, man. And I don't know if I'd even mess with that. Like, that is asking for trouble. Yep, starting to break this thing down. Guys, let's see if we come to this golden pocket. Naked daily point of control at 87K, pretty much 87K, and the golden pockets there. 86,980. Golden pockets also in that area. I would be looking for a potential long from this area. Actually, let's do this. Let's set an alert on this naked daily. We could do scalp long. And it's not guaranteed, guys. If we see bull divs as we're coming down there, we want to long it. So far, market cipher B, lower lows. If we continue to make lower lows like this and continue to kind of see this overall thing here and money flow coming up, that could give us the bull divs. Nami is showing some nice bull divs already. So, but I want to hit this golden pocket before I long personally. Okay. You switch to short. Awesome. Just make sure, like, if you entered short right now, you know, on the break of this channel, your stops would be above those highs. And then you'd be targeting the naked daily. That's still a 4.8 risk to reward ratio. Because if you start to break these highs again, you're likely to probably continue up to VWAP at 90.4. So just make sure your risk management is intact there. If you break these highs right here at like 89,850. All right, guys, have a good weekend, everyone. Really appreciate all of you so much. I'll be back to my normal schedule, Mondays and Wednesdays videos around market close, Tuesdays, Thursdays, Fridays, live streams. And coming up here for Christmas, Christmas is on a Thursday. I definitely will not be streaming on Christmas, but I actually, I don't know yet. I'll let you guys know. I think I'm going to be doing some traveling and stuff like that. So, next week will be normal week, and then we'll go from there. Thank you all so much.